All right, there we go. Yo, what up for y'all watching this on the YouTube replay? Hope you're having a good Saturday. We're just going to be looking at some stocks to maybe buy next week. I'm going to be doing a quick portfolio update, show you the stocks I own. I love being fully transparent. I'll show you every stock I own, how much I'm up and down on them. Check this out. Year to date, we're up 11%. On the 1 year, we're up 17%. And here's my total percent change in every stock in here. So luckily, we are green on every holding in here. We also have a Roth IRA, which did kind of struggle on Friday. Again, it's only like 1,400 bucks. I am trying to put more money inside my Roth IRA. I'm trying to contribute more because a Roth IRA is so cool. It's a tax-free retirement account. And on Friday, we were up 1.03%. And here is our Weeble portfolio. This is my kind of risk-on portfolio. I do have some riskier companies in here, but all time, check it out in the kind of top left there. We're up 13% all time in here, so doing pretty decent. And we have some winners and some losers in here. So yeah, like UiPath, Zoom, CPRX, they haven't been doing too good lately. But we do have some main winners like Robinhood, man. We're up 730% on Robinhood. I regret every share I sold in them. Reddit has done surprisingly very well lately. AMD's done really good since earnings. Or since it's like it reported earnings and fell and now it's recovered a bunch. Yo, what up, Millers? Hey, thanks for the rose, man. Appreciate that. Yeah, hey, happy Saturday. What do you think of IBIT? Hey, that's just Bitcoin, but ETF. So it's SIPC insured, which is pretty cool. But anyway, here is all the stocks in my Webull portfolio. Wait, what are we up year to date, actually? Let me check this out. 23% year to date, pretty cool. And we've got $91 of dividends. So let me also pull up my buy and hold portfolio. That's kind of what it's called on the top left there. Once I buy a stock in here, I try to just hold it on for the long run. I try and just buy really good, high quality companies. So these are the ones that I've picked. I recently picked up another share of Amazon down there on the little dip. They've had a nice recovery since then. But yeah, let's check out some of the stocks here. I did want to look at CPRX. Yeah, what up, Goop? And what up, Matt? Yeah, Robinhood's doing great. Robinhood's kind of been moving with crypto as well. So let me give you an update on CPRX stock. That was one of the ones we're kind of down on right now. They had really good earnings, but the stock fell anyway. Check that out. They kind of gapped down on earnings. That blue line there was my cost basis. So let me show you what's up with CPRX. Let me show you why I personally really like this one. First off, look at this multiple. The PE ratio, which is the net income multiple, is only at 12. So this stock trades at 12 times net income, and they have basically these prescriptions right here. And look at this orange line. That's what the analysts were expecting. They beat on revenue, they beat on net income, and they beat on EBIT. So they triple beat, great earnings. They basically sell these different prescriptions here for FDIC or whatever it's pronounced. You know, it's at a new record right now of 25%. We can kind of see this on an annual basis. It's at a new record. Same with their next one. I don't even want to try and pronounce that. That one's up 17%. And then whatever this one is, a Gamry. Hey, they literally just started making this one. You know, it was $1 million of revenue. Now it's $22 million this quarter, up a nice 1,700% year over year. Again, it's compared to small numbers. But my other favorite thing about this stock is just the profits they're making. They're literally making 50 mil plus in net income a quarter. It's up 27% year over year. They have an absolute fortress of a balance sheet, no debt at all. So completely no debt on this company. And they have a record amount of cash. Look at that year over year. They went from 375 mil of cash to $652 million of cash. So you're buying a company that makes 200 million plus in net income a year with no debt, 650 million of cash, and the whole company, if you look in the top right, the low market cap there, it's only worth 2.4 billion. So that's why I decided to pick up some of that company. I might be looking to buy more on the dip there. So yeah, hey, here's a cool one. Yeah, we'll look at SoundHound AI. SoundHound AI. We'll look at NVO. We'll look at CMG, Chipotle. Yeah, what's up, guys? Happy Saturday. So this is SoundHound AI. They're up 26% on the day. And if you own this stock, there's only one thing you really want to watch here, and that's this subscription business. Let me see, did they beat on revenue? So yeah, look at that. Analysts were expecting 32 mil of revenue, and they made 42. So a nice beat. I bet they beat from the subscription business because this is most of their revenue. And look at the growth year over year. The subscription used to be nothing, making them, a couple 100,000 a quarter, nothing. But now, look at these year over year growth rates, up 585% year over year. It's 25 million in the most recent quarter. And I bet based off this huge beat, it was just like another record quarter for them. So you still got to be careful. They're still not making any money yet, losing, the losses are kind of worsening. They're losing like now 40 mil a quarter, but the growth is really why investors like that one, that subscription revenue growth. So here's NVO. Yeah, Novo Nordisk. This is the weight loss company. And hey, they've had a nice little recovery. So went from 45 and now they're at 51. So Well, I'm saying nice little recovery. If we zoom out, it's not a nice recovery yet. But check this out. Here's why I think the risk reward might be decent on this one. Like, look at this multiple. The PE is a 13. The industry average is a 21. So first off, they trade at a really low valuation. What does this company sell? Well, look at that. 93% of the revenue, so basically all the revenue, comes from their obesity care products. So this is the company that actually owns Ozempic and Wegovy. Those are the two main weight loss prescriptions. You probably heard of Ozempic before. Elon Musk is on it. And look at this right here. They're making over $4 billion in net income every single quarter. This is ridiculous, up 45% year over year. And they have a 3.5% dividend. The reason the stock is struggling, though, basically because they gave guidance their Ozempic patent expires in a couple years, which isn't great. But I think that's being overly priced in right now because in terms of financials, the business is looking great in terms of net income and everything. But it's the future uncertainty is why the PE is falling, in my opinion. Yeah, what up, Wes? Let's check this out. CMG. I looked into gold. I looked into Gold Corporation, like Newmount. I was shocked. What do you think about this kind of stock? Yo, improvement. I'll show you my favorite gold stock after this. And I actually don't own any gold. And yo, Reticent Saints. I'm probably saying her name wrong, but yo, thanks so much for the rose there. And I'm so glad you did good on SoundHound AI. Yeah, that subscription revenue looks like it's bringing a lot of growth to the company. So here's Chipotle. Unfortunately, they've had this slow bleed out. Look at this. Like they were falling, gap down on earnings, falling again. So I think it's just because the valuation's still a bit high. So look at this. If you look at the PE, it's a 36. The industry average is a 29. So they are trading at a high multiple, which is okay as long as they're growthy. But this is why I think that the valuation is starting to come down a little bit because they kind of lost their growth. Low single digit growth, they're still growing nonetheless, but look, the revenue is only up 3% year over year. 3% growth right around inflation levels. So revenue's up 3, but look at this net income. Net income's actually down 4. So the margins did get hit a little bit on Chipotle, but I think this one might be worth looking into. I love Chipotle. People love eating healthy. So, they're still extremely profitable. They have no dividends to pay. Look at this. They're making 400 mil plus a quarter. So they're definitely fine, but it's just that the multiple is coming down because it looks like they're starting to slow down in growth. So here's my favorite gold company. And if anyone's looking for gold, check out RGLD. So this is Royal Gold, and they actually collect a bunch of gold royalties. So first off, it's probably better to just own like gold, the commodity, but this is kind of gold with a dividend. So you actually get a little yield here. You get a 1% dividend yield on Royal Gold. And that's because from their royalty streams, check this out. Royalties, this is 36% of the revenue. It's up 50% year over year. And if we look at it on an annual basis, this is really good. It's at a new record for the full year 2024. So the royalty streams, which are all super high margin for them, are doing amazing. And the stream interest as well. So that's up 9% year over year. So this is honestly my favorite gold stock if I were to pick an individual company instead of just buying physical gold. Because look at these net income numbers. 132 million net income in the most recent quarter. No debt at all. So this just having no debt, it just takes risk off the table. So they have no debt. Let's see how much cash. $258 million of cash, making, 132 million net income a quarter. How much does their dividend cost? So they're making 132 mil this quarter. And the dividend only cost, if you kind of, let's see, wait. The dividend only costs $29 million a quarter. If you look in the top right there, 2025 Q2, dividend only costs $29 million. Easily able to afford the dividend. So that's my favorite gold company if I had to buy one individually. Getting financial advice here. Let's see. Someone said fly stock. Hey, what up? Would Chipotle be affected by bad economic conditions like inflation? Yeah, of course, like input costs. I know they were talking about like avocados, the tariffs hurting the avocado cost at Chipotle, something like that. Anyway, here's Firefly Aerospace. They did just IPO literally 2 days ago. They IPO'd at 45 and now they're at $50. So let's see. Again, they just IPO'd, so we don't really get that much history behind this company. But what we can see is that most recent quarter, they did 55 mil of revenue, up from only 8 million the same time last year. So again, I wish I gave you more thoughts on that one, but they just IPO'd. So yeah, Miller said AMPX, and then we can look at Texas Roadhouse and Trade Desk. Yeah, the Trade Desk fell in earnings in Nvidia too. I like it. I love Nvidia. So here is AMPX stock. Don't think I've heard of this one. It's an exactly $1 billion company. So they have $1 billion market cap. Looks like they sell battery segment. It's where the revenue comes from. Only 34% of the revenue actually comes from the US. But let's see. Yeah, look at that revenue growth again. It's small numbers, but the revenue went from 2 million to 11 million the most recent quarter. We really want to see them continue this trend, keep that trend up. They are still losing like 10 million a quarter, but I think investors are happy with this revenue growth. So as long as they keep that up, at this growth rate, what's the revenue going to be this time next year? What was the ticker symbol for the gold stock? Yeah, that was RGLD. Or wait, RGLD, right? Yeah, Royal Gold, RGLD. And by the way, if you missed anything, I'm streaming on YouTube as well. You can kind of rewind it on the YouTube stream. So let's look at Texas Roadhouse, then NVIDIA, and Rolls-Royce and the trade desk. Yeah, we'll get to these. So here's Texas Roadhouse. Dang, looks like they fell 6.5% on Friday. They must have reported earnings. Let's go see what they were. So they beat on revenue. They missed on net income. So looks like the margins fell, and they missed on EBIT. So that was real. So yeah, look at this. So the revenue year over year increased 12%. But the net income only increased 3%. So if we go to the margin right here, yeah, margins fell 9% year over year. Again, it's not the end of the world. They're still making, 100 mil plus in net income a quarter. They pay a dividend too, right? Yeah, look at that. With Texas Roadhouse, you get a 1.5% dividend. I love their like honey butter roll things. And look at that. So look, that's all their revenue. Basically, 95% comes from Texas Roadhouse, and they have over 33s. Never heard of them, but yeah, I think the investors are a little concerned at this margin collapse. This is the same thing that happened to Chipotle, and the same thing that's happening to Wendy's. Actually, man, anyway, look at Wendy's stock. I feel bad if you own Wendy's. Look at them. I mean, that's not what you want to see. So anyway, let's look at NVIDIA right here, and then the trade desk. We'll check that one out. So someone said what out. Yeah, hey Stefan, if you want to get, I'm on a brokerage right here. If you want to get this little software I'm on, it's in the link tree in my bio. The first link there, it's an affiliate link too. So Yoda Vitas, we'll check out NTRA and Kava. Yeah, Kava is like a Chipotle competitor. So here's NVIDIA. Wow, look at that, all-time high on them. So congrats if you own NVIDIA, world's largest company. Obviously, we know they sell GPUs and they have a huge market share. Check this out, a 20% PC GPU market share, up from 18% same time last year. They have this automotive software that Lucid's using. Uber ordered $1.25 billion worth of cars from Lucid, autonomy driving cars that's actually using the NVIDIA software. But honestly, the best part about NVIDIA is just the profits they're making. I mean, what other companies doing? I mean, besides the Mag 7, but like 20 bill plus a net income a quarter, growing like crazy. They have the earnings tailwind from being able to ship chips back to China. So, what about the free cash flow? Yeah, look at that, up 78% year over year. So ridiculous growth there. The huge CapEx spend of like Amazon, Meta, Microsoft is all like helping out NVIDIA. So yeah, let's look at the trade desk. This is, and also NVIDIA is so big that they literally own some individual companies. NVIDIA owns some ARM, CoreWeave, Nebius, APLD. Pretty cool. All right, so let's get to this next stock here. I did want to look at TTD, the trade desk. So this is the TV advertising company that just tanked right here. They originally tanked back here because Netflix dropped them as a partner. So Netflix used to use them to get Netflix made this new ad tier subscription on their website, and they were using trade desk to find advertisers. And now Netflix just does it themselves. They kind of dropped them. They're also seeing some increased competition from Amazon and Roku. Amazon and Roku had a huge partnership. But let's see here. Let's see what they actually did. So they beat on revenue, they beat on net income, and they beat on EBIT. So it was a triple beat quarter, but I think it was the bad guidance. You know what? Let me check the news tab here. I wonder, like, that must be it. I mean, plunge over 80% on growth concerns. So must be future growth concerns. So they did have a high multiple before today. What is it right now? So yeah, still right now they're trading at a 65 PE. So look at this. The revenue's up 18%. Net income is up 6%, so the margins did fall a bit. I remember the margin growth there was one of my favorite things about the trade desk. Looks like that stopped. But still, I think the trade desk is worth looking into. They're still printing money. I mean, over 100 million net income a quarter, but the valuation is a little high, especially if the 65 PE and the growth is expected to go down, or it's not as much as investors thought. Maybe that one is justified that. Well, thoughts on the merger with Boxable? Yo, so isn't Boxable like not public yet? I remember hearing about them. What's the ticker symbol for that? Maybe we can check that one out. Yeah, Boxable. Anyway, here's NTRA. Yeah, well, let's check it out. So what is this one? $20 billion company. They're doing great. Look at that. They were up 7% on Friday. They were up, and then, they were up more than that. So they gapped up, and then they sold off a little bit. Let's go see what their earnings were. They still must have been good. So huge beat on revenue. They were expecting 470 of revenue. They reported 550 million. They missed on net income and they missed on EBIT, but I don't think investors really minded that because of how growthy the sales were and how much they beat. Yeah, they've deleveraged their balance sheet like crazy since 1 year ago. The liabilities used to be 44% of the assets. Now it's only 29. Cash flow exploded. Let's see. Did they, no? Well, anyway, I think that might be why the stock was slightly falling. They didn't go up, they didn't hold on to the 14% gain. Maybe it's because of the net income numbers, but still, that's really good sales growth. But we gotta watch the net income number. The stock's done great. Yep, I sold my Nvidia for UNH. I see it been 70. Hey, yeah, it's smart to have a stop loss there. Let's see. Did you cover NVO yet? We did, Sleo, but we can cover it again in a little bit here. Yo, big mans, what's up? So here's UPS, and I think this one might be at risk of a dividend cut, and I'm going to teach you how to do this yourself. So when we look at a stock like this and you see the dividend, like, wow, 7.5% dividend, how do we know if the dividend's safe? Well, I'll teach you how right now. Obviously, there's the payout ratio to the right of that, but I'm going to show you the numbers for yourself so you can kind of draw your own conclusion here. So look at the most recent quarter there on the very right. They made $1.3 billion in net income in the most recent quarter. So they made $1.3 billion in net income. Let's go see how much the dividend cost. And it cost $1.35 billion every single quarter. So if this company at least doesn't make $1.35 billion in net income, they literally can't afford the dividend. So that's one thing I would be careful with because unless the net income starts to grow again, this one could be at risk of a dividend cut, which wouldn't even be the end of the world. Like 7.5% is already a crazy high dividend. Like all their net income is just being gobbled up by the dividend payments. So they have no like leftover money to like invest in themselves, buy back stock, buy a company. They have no leftover money, so they'll have to issue debt or issue shares. Unfortunate. All right. UPS. Hey, what up, Austin? Oh yeah, let me look at Bank of America. Then we'll look at ALAB. We'll look at NVO too. So let me go quickly to Bank of America. That's a Warren Buffett stock. So we go to Warren Buffett's portfolio here. Check it out. His third largest holding is Bank of America. It's 9.9% of his portfolio. And this is kind of like a great dividend growth company to just buy and hold for the long run. Because check this out. This company has a 2.3% dividend yield. And this one has a good payout ratio, something I can work with, a 31% payout ratio. So that means they actually have room to raise their dividend. And here's what they do. We can see the revenue comes from, consumer banking, global markets, wealth management, obviously global banking. And check this out. We can see this company is making $7 billion. Wow. $6 to $7 billion of net income every quarter. Just for fun, let's go see how much their dividend costs. So they're making $6-7 billion in net income a quarter. And this company's dividend, oh wow, it just went up oh no, that's the stock buybacks. Actually, that's crazy. First off, Bank of America spent $5 billion on buybacks just in the most recent quarter. So first off, they're doing crazy stock buybacks. But look how much the dividend cost. The dividend only costs $2.2 billion of net income every quarter. And actually, check out what these buybacks do for you as a shareholder. So look, the net income's up 3% year over year, but the EPS is up 7% year over year. That's the power of the buybacks. They bought back 3% of all the shares that exist. So there's less shares that exist. So the net income is spread out through less shares, giving you more net income per share, making the stock go up. So let's look at ALAB. ALAB, Astera Labs. Yeah, good morning. Happy Saturday, Joshua. Happy Saturday, everyone. Hope y'all are having a good day. Check this out, Astera Labs. This is one of my favorite companies, favorite growth stocks right now. I wish I owned them. I don't own them right now, but I want to show you why this stock is at all-time highs and why they deserve to be at all-time highs. Usually when you see a stock at all-time highs, if you go to their financials, it usually explains it. And here's why this one's at all-time highs. I mean, first off, this is incredible growth. I mean, this is organic too. They didn't acquire a company to get this. The revenue went from 76 mil to 191 mil, 150% increase year over year, and not just revenue growth, but profitable growth. They made 50 million in net income on that. Plus this fortress of a balance sheet. This company has literally no debt at all. The assets are at a record. Let's see how much cash. $1 billion of cash, up from 830 million. So here's a company, with insane sales growth. So at this growth rate, what's the sales going to be this time next year? Incredibly growthy, making net income every quarter with no debt, $1 billion of cash. I can see why Astera Labs is at all-time highs. And they're on my watch list too. What app are you using? Yeah, hey, Jackalope, I'm actually on a broker right here. So if you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. It's also an affiliate link. So if you sign up and deposit $100, we'll both get some free stocks. We'll both get 5 free stocks. But also, you don't have to deposit any money to use the like stock analysis tools. Like, let's go look at this one right here. I've heard of this one. Someone said Root stock. This one's kind of a smaller cap. They did fall, but let me show you what I like about Root. I believe this is that insurance company. So yeah, check this out. Direct to consumer insurance products. Look at the growth. I mean, the revenue was, 71 mil. Now it's 350 million the most recent quarter. So the growth has come back to this company right here. So if you're looking for an insurance business, this is an interesting one. They're also now making net income every quarter, 20 mil in net income every quarter. Revenue's up 32%. So yeah, I guess if you're looking for a smaller insurance company, Root is a pretty cool one. And let me show you my favorite insurance company. It's actually ticker symbol PGR Progressive. I do own this one. I just bought some more shares of this one as well, but I got 3.8 shares of Progressive Corp. You've probably heard of her. I'll be super quick about why I like Progressive Corp so much, but Root is also, I like them because they're making net income every quarter and really growthy. So is Progressive Corp. First off, look at Progressive's net income, 3.2 billion in net income, up 100% year over year. So the net income's doubled. That means the margins are growing like crazy, 15% net margin on them. And look, the revenue just hits a new record every quarter. Their premiums, look at that. Revenue's up 23% to 19.5 billion. Anyway, Progressive is one of my favorites, and they return money to shareholders via special dividends. So normally, look at this. They only make you 10 cents a quarter. Now they made paid $4.50 to you as a special dividend. And especially with this new net income number, incredible. All right. CPRX average price target is 65 plus. Yeah, John, I love CPRX. We were just looking at them actually. We can check them out a little later. Can you talk about crypto? Yeah, we don't really. I don't actually own any crypto, and there isn't too much to talk about crypto, unfortunately. But it's also a kind of a cool thing. Like on Bitcoin, there's no earnings reports. Bitcoin can't miss on their net income number. But here's a cool stock. This is Alibaba. This is like the Chinese Amazon, if you've heard of them before. AliExpress is what they own, and they're Chinese. But look at this PE ratio. A 16 PE, pretty fair. We can see their active customers right here. They got 903 million annual active customers. Pretty cool. But basically, look at this net income they're making, and this is in USD. They're making a couple billion in net income every quarter. Now that the profits have started to explode, they're starting to pay out dividends, so you're getting near 1% yield. Only a 13% payout ratio. So Alibaba's pretty fair valuation. They're like the Chinese Amazon. I actually own Amazon. Someone said, how does PSIX look? Yo, that's been one of my best performers. I love this stock. Let's hope the earnings have updated. Again, I wish I owned more of this stock. I bought the stock literally when it was at all-time highs, and it just continues to hit new all-time highs because of the incredible growth. I love analyzing stocks on here. Let's see, PSIX. Let's see if the earnings have updated. Down here, they have not yet. So basically, here's why the stock is at, oh my goodness. Here's why the stock is at all-time highs, and here's why they really deserve to be. If you look at this orange line right here, this is what the analysts were expecting. The analysts were expecting 136 million in revenue. Well, they made 191 mil in revenue. But this net income beat was the huge winner. Analysts were expecting 87 cents of EPS. They made $2.22. So the PE ratio is about to collapse on this company. And it was already pretty low at 28, which is below the industry average. So that's why I think there might even be more upside potential on this company. And they're still a pretty small one, only a $2.29 billion name, $2.29 billion company. That's that the net income just, doubled. So it should be like 40 mil in net income this quarter. It's not updated yet, but still, PSIX, I'm glad I own them. I made some YouTube videos about them as well. Ethereum, Tom Lee went full in. Really, what's cool about Ethereum is, with some Bitcoin or some coins, you can't actually get a yield on them, but you can actually get a yield on your Ethereum because they're a proof of stake coin. Again, I don't actually own any crypto. I own some Robinhood stock which moves with crypto. But oh yeah, Daniel, let's look at Rolls Royce. My bad. Let's check it out. RYCEY, right? Yeah, so there's the ticker symbol. They're not an American company, so just know that. But check this out. The stock has had a pretty monstrous recovery. And when most people hear Rolls-Royce, they think of the cars. But this is no car business. This is actually an aerospace and defense company. And the PE is a 15. Actually, wait. Dang, the net income just popped off. I'll look into that in a second here. But look, the aerospace business is half the revenue now. So that's, half the revenue. Then they're in the defense business, power systems. So they're more than just a car business, which is pretty cool. They've deleveraged their balance sheet. Check this out. They used to have more liabilities than assets. Now they actually have more assets and liabilities. So I love that for Rolls-Royce. It looks like the net income just blew up for the first half of 2025. They report a little weird because let's see where does the revenue come from? Oh, look how diversified it is. Only 29% from the US and then UK. Where are they HQ'd in? In London. Yeah, UK. So okay. That's interesting. SMCI, yo, Omar, RIP, my super micro position. That one's having some struggles with margins, so I do still own some shares of this one. Luckily, I got in at this one, during this whole accounting fraud shenanigans. But let me show you the unfortunate part about super micro and why I think they fell. The valuation was a little too high going into earnings, and here's the bad news. So first off, the revenue grew. The revenue grew 7.5%. But the net income fell by 34. So what does that mean in English? Basically, the margins fell 39% year over year. It's tough. And dang, they leveraged up a bit. That was some good cash flow numbers though. What's the free cash flow on that? 800 mil of free cash flow that quarter. Not bad. Not too shabby. What's the name of the website you're using? Yeah, well, USOM. I'm actually on a brokerage right here. So if you want to get this little software I'm on, it's where I love to buy stocks and keep my cash. You want to get this little broker I'm on, it's in the link tree in my bio, the first link there. Or you can just type into Google. It's called Moomoo. But yeah. In your Robinhood account, can you hold crypto and stocks in the same account? Yeah, you can. In the same taxable account. You can't own it in actually it might be a different account. I don't know. It's like separate. I don't know. All right, let's keep. But yeah, I use Robinhood as well. But this one you can't really analyze stocks in here, so that's one of my favorite. My favorite app is this one right here to really analyze a company. Best tools and stuff. All right, let's see here. Let's see, what's XRP doing? Well, SoFi breakout. Yeah, let's look at SoFi, man. I love SoFi as well. Another company that I think just deserves to be doing well. I think I'm actually shocked they're not doing a little better because they're so growthy. So check this out. This is the best part about SoFi is the growth of their financial services. So they're a fintech. They have their own banking charter. And look at the growth. It's up literally 101% year over year. That's what you love to see. The financial services business is popping off. Like, let's just see total revenue. So total revenue is up 42%. Incredible. And on that, they made $100 million in net income. So people are really starting to take SoFi serious. They're super growthy. Their financial services are taking over. They're making net income every quarter and a lot of it. So that's why I think that one deserves to be doing this good. They even beat my expectations with that growth. Ooh, thoughts on Boxable merger with FGMC? You know what? Let's pull up that stock, FGMC Merger Corp. So I guess this is the company that's now going to own Boxable. Looks like in the top right, they're only $100 million company. So I wonder how big Boxable actually is. Can maybe read the news here. Wait, FGMC to issue 350 million of shares, valuing Boxable at 3.5 billion. Jeez. Well, that's interesting. All right. Let's see here. TXN recently dropped. What up, Billy? Let's check. Is that Texas Instruments? So yeah, this one is honestly, it's not been too well of a performer, and that's because the financials aren't great. Like if you look at their analog revenue right here, it's down from 2022. For the full year 2024, it was 12 billion. That's kind of the same that it was, before the pandemic. What about this one? Embedded processing. Yeah, they've just been slow. Like, look at that. It's the lowest it's ever been for the full year 2024. Well, that's a smaller business. Anyway, let me actually go to the net income down here. So revenue is up. Actually, this is good. The revenue's up 16. Net income's up 14. I just remember, look at these year over year declines back here. They lost all the growth from 2022, and now they're starting to recover back, which is good. I do like that the net income's up 15%, but it was an easy compare after being down 50% from the peak. So what's the dividend on this one? Well, okay, so wow, that's a high payout ratio. So they have a 3% yield, 100% payout ratio. Well, let's see if the dividend's sustainable. So they made $1.3 billion in net income this quarter. So remember that. This company made $1.3 billion in net income this quarter, and the dividend cost, okay, $1.24 billion. Still 1.24 bill, that's a high payout ratio. So yeah, that is in line. They really need all their net income's being kind of eaten up by that dividend. So it's tough. All right, so RTX, yeah, let's check it out. RTX, and then we can look at Booking Holdings, Taiwan Semi. I love Taiwan Semi. We can look at EO. Yeah, try not to spam in the chat. Yo, hold on. Yeah, try not to spam. We'll get to all these stocks, you don't worry. So here's RTX Corp. This is Raytheon. This is one of my favorite aerospace and defense companies. So if you're looking for that industry, you don't have any aerospace and defense exposure, this is one of my favorite picks out there. They own Pratt and Whitney, Collins Aerospace, and they own Raytheon. Raytheon's huge, so many deals with the government and stuff in the military, and they're making usually around 1.5, 1.7 billion in net income every quarter. Get a nice dividend, 1.66% dividend yield. The payout ratio is actually lower than that. The payout ratio is based off the last full year, and it included this little one-time adjustment quarter where the net income fell. So anyway, safe dividend on this one, should grow. I just like that industry. All right. Um, let's see. Booking Holdings. What's the ticker symbol? Booking Hold BKNG. Okay, so I know this company does crazy share buybacks. Look at that performance. I mean, it's more than doubled since 2019. So let's see how they're doing. So operating profits. So usually, wow, they're making a couple billion in net income a year. You're over 4 billion of net income a year. They've had some little one-time adjustments to the net income, so we really want to look at the operating profit. So yeah, they're making over 1 billion in net income a quarter. Let's see how they're doing on the share buybacks. So net return on stocks. Yeah, look at that. This is what I love about them. They spend so much money buying back their own stock. Well over $1 billion they spend every quarter buying back their own stock. Also, they have a dividend now. The dividend only costs them 300 million. So like a 20%. Yeah, look at that. 20% payout ratio for a 0.7% yield. Yeah, this is I love Booking Holdings. Okay, so TTD, please. Yeah, let's look at Trade Desk. TTD got hammered. Yeah, man, that's that TV advertising company. They lost their partnership with Netflix back here, and now they're down 38% on the day. So let's see. I remember they beat on every metric, so they beat on every metric. But I looked into the news. They basically gave really bad guidance of really slowing growth. When you have slowing growth, you know that it's just going to hurt their multiple. So the PE is still a 65 even after the huge dip. So um, that maybe the multiple is going to go lower. Who knows? But the business, the margins did fall a little bit, but still they're making a lot of money. If you average it out there, over 100 million in net income a quarter. The revenue's up 18, but net income's actually only up 6. So that means the margins fell by 10% year over year. So I do think this one is worth looking into. But I got to do like a 2-year out forward PE to see how really expensive they are. I don't know. So, yo, what up, Carlos? Good afternoon. Hey, yo, what up, Yadnesh? How's it going? Hope y'all are having a good Saturday. So, let's see here. I wanted to look at War Chief Gaming said UNH. Ooh, and we can look at Oracle too. So, United Health has been struggling hard recently. This is that Medicare Medicaid provider that basically, if this company gets accused of fraud, which is kind of being investigated right now, they will actually get kicked out of Medicare and Medicaid for 5 years. And that's a huge chunk of the business. So that's what's really weighing on this multiple right here. The PE is a 10 and the industry average is a 12. They set the industry average when they fell a huge chunk. But basically, this multiple collapse from what it historically trades at 25 is basically from the uncertainty of the future. So they're still making a bunch of net income for right now. Like they're making a couple billion net income. You get a 3.4% dividend, but you want to be careful of the future. But I think the risk to reward is actually looking good on this one. I think it's worth a nibble. Like again, you don't want to have a huge meaningful amount of your money in a UNH, but I think it might be worth a nibble as like a quarter of a quarter size position or something. What platform are you using? I just set up my IBK. Yo, fam, I'm actually using a different brokerage software called Moomoo. If you want to get it with my affiliate link, it's in the link tree in my bio, the very first link there. You can just type it into Google. But if you want to get this little software I'm on, it's in the link tree in my bio, very first link there. It's my favorite app to, buy stocks on. And I keep my cash in here too, earns the interest. Anyway, let's look at Palantir. What up, John? Let's check it out. So Palantir stock, yeah. Um, uh, You can, yeah, that's a good point. Someone said you can have UNH, but have some stop losses. That's a good idea. Put some stop losses on UNH. So if it goes under a certain price, you'll be stopped out. So anyway, here's Palantir. Yeah, man, this stock's at an all-time high, and they deserve to be doing good. I just think that the valuation's too high, man. This is 128 P to S. This is price to sales. So not price to profits, not price to net income, but price to revenue is 128. So realistically, this company would need to double their revenue by 2030 for this to be somewhat reasonable. And they might pull it off if they can keep CAGRing at this, compound annual growth rate at 48% through the end of the decade, through 2030. They might be able to pull that. See, this is why they're so expensive, because they're so growthy. They're everything investors love. They also just had their first billion-dollar quarter. They made 330 mil of net income on that. Margins just hit a record. Its margin grew 63% year over year, but half the revenue comes from the government. A lot of police stations use their software, and this business grew 49% year over year. That is quite the growth, 49% year over year, and the commercial business grew 46% year over year. So both segments of business on Palantir are growing like crazy. They also have a very high or they have a really good balance sheet. Look at this. They have no debt at all, lots of cash, and they have a record amount of cash. Let me see here. Yeah, $6 billion of cash, up from $4 billion. Yo, Ellie, Chamont, thanks so much for the rose there. I really appreciate that. Sorry, I didn't see that. If you got a stock you want me to look at, let me know. I'll check it out for you. All right. Oh yeah, EOSE. Let's see this one. Hopefully this isn't like a small cap. No, they're pretty decent. A $1.6 billion market cap. This one might be in the uranium industry because this looks exactly like the uranium ETF chart. Oh, it's not. So I might just be dumb. Okay, so first off, this is not a great balance sheet. They have a lot more liabilities than they have assets. You don't normally want that for a stock. And they're losing a lot of net income. They lost 222 mil this quarter. Again, the whole company's worth 1.6 billion. So losing 200 mil this quarter really isn't great. Do they have good sales growth? So they do have good sales growth, but just small numbers, like only 15 million of revenue. But as long as they continue this trend, they're really growthy right now. Anyway, that one's you're watching the growth there. I would be careful with the net income losses, especially with that really bad balance sheet. All right. I use Yo, what up, Yadnesh? What's up? Pursuing said EVIL stock. Is that a stock? Let me know if this is the one you're talking about. I don't know if that's a stock that exists. All right. Lucas said, I just bought ALGN. What do you think? What is this one? Align Technologies. Is that like Invisalign company? So they're a $10 billion company. This might be like a dental. So yeah, Clear Aligner. I believe, yeah, that's that, yeah, orthodontics. So yeah, this is your dental care play right here. So yeah, Invisalign or something, Clear Aligner. How's that doing? So the business is only up, or it's actually down. It's down 3% year over year. Systems, that's up 5% year over year. Let's see net income. Are they profitable? So that's good news. Yeah, they're making over 100 million of net income a quarter. So that's a good news. They're really profitable. But I would just like to see them grow a little more because, yeah, the revenue's down 1.5%. That's the lifeblood of the company. Revenue's down 1.5%. Can you check the McDonald's liabilities? Yeah, hey, so that's normally that. So someone's asking, why does McDonald's have way more liabilities than assets? If you go to a Wingstop as well, like look at this. Why does Wingstop have way more liabilities than they have assets? Well, that's because these are royalty companies, and these royalty streams are intangible assets. They're not added to the balance sheet. So Wingstop, do they really only have 708 million of assets? No. They have this intangible asset that's worth a lot more that it can't be added. So the McDonald's liabilities are completely okay. They could easily pay off their debt if they wanted to. I mean, McDonald's is spending billions on buybacks, so it's no big deal. And by the way, it's different for restaurants because of their royalty stream. McDonald's also has a huge real estate portfolio. I only know that, but I got a lot of McDonald's stock. I got 14 shares in them. Anyway, let's see. I have a position in Tesla. Oh wait, should we look at Tesla? Looking at Gilead Science. I'm not sure what that is. What's the ticker symbol there? Gizmo, what's up, dude? He said SEHD. So yeah, if you're looking for an ETF, with a higher yield, this could be one to maybe put on your watch list right here. So if you're wondering what is SEHD, well, this is an ETF, exchange traded fund, and here's all of its main holdings. It owns a lot of the higher yielding stocks like a Chevron, a Pepsi, a Cisco, a ConocoPhillips, an Altria. So if we go to the dividend right here, you're getting a near 4% yield on this company right here. So yeah, basically it's like an S&P 500 alternative to get a higher yield. It's not going to outperform the S&P 500, but you get the nice dividend, steady and consistent income. All of them pay qualified dividends as well. So all those dividends you receive are taxed at that super low rate. let's see, Duolingo. So DUOL, Duolingo. So this stock right here is one that just reported earnings, and dang, they've really given up a lot of their gains. Look at this. So originally they went from 340 to 450, and now they're at 370. So let me see what the earnings were. So yeah, look at that. They beat on revenue, they beat on net income, and they beat on EBIT. So it was a triple beat quarter. Wow. Continued the growth. Yeah, the net income grew 83% year over year. Revenue grew 41, so that means they're growing their net margin. Net margins grew 30%. What about the FCF? What about the free cash flow? Yeah, free cash flow is up 60% year over year. They deleveraged their balance sheet as well. I mean, this is great news. It's normal for the assets to go down when you deleverage because you're using cash to pay off the debt liability. You see this with DocuSign. You see this with a bunch of other companies. This is great news. You really want to focus on this ratio. So look at this. They used to have a 64% asset to liability ratio. Now only 36. They really just had a great quarter. We look at the subscription business. This is most of the revenue. I mean, it literally just hits a new record every quarter. I mean, it grows 50% every quarter every year. So Duolingo is one that I have on my watch list. I want some exposure to them eventually. A bullish IPO, I got 400 shares. Plan on selling within 24 hours. Yo, Sama, I thought you can't sell if you sell the IPO, so someone said I bought before the IPO and I plan on selling it within 24 hours. Here's the thing, and I'm not sure most brokerages do this, so just double check your app right here. Whenever you want to buy an IPO, look in the very middle of my screen here. It says, I'm aware of the flipping policy. Investors selling or flipping shares within the first 30 days may be restricted from future IPOs. You're not allowed to sell your shares that you buy before IPO within 30 days. That's just kind of unfortunate. So maybe yours is a little different, but yeah. Anyway, let's go back over here. Yeah, but what are they valuing at? So they're IPOing at a $4 billion market cap. Pretty interesting. MSTY, Sean says not worried about NAV erosion. So yeah, MSTY, that's one thing a lot of people worry about because of basically they just sell calls. This really won't outperform. I mean, you're basically buying this ETF to maximize your dividend income. You get paid a monthly dividend. The yield is crazy. The yield, the dividend payment should go down by double digits every year. Like, look at this. In 2024, that year, you got $27 in dividends. Now it's only 13. So the amount you get every year should go down by double digits just because of the nature of these ETFs. But basically, buy it to maximize your dividend income. I don't think it'll outperform in the long run. Do you have a YouTube channel where I can watch your previous videos? Absolutely, Max. Hey, that's the best way to support me. I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. I got none of that, so watch out for people impersonating me. But if you want to help me out, I'm streaming on YouTube as well. My YouTube channel is called Nathan Robert. You can just type Nathan Robert into YouTube. It's also in the link tree in my bio if you want to. You can replay the stream as well if you missed anything. I noticed someone on TikTok with the same name as yours. Yeah, hey, John, this is my only TikTok account. Yep, watch out for people impersonating me. The only thing I have is a YouTube channel. I have no other TikTok account. I'll never follow or DM you. I sell nothing, literally. So anyway, let's keep going here. More stocks. Yeah, I'm in college right now. I am just a college student, definitely not an expert. None of this is financial advice. Majoring in business admin. Yeah, there you go. So Gilead Sciences, GILD. Let's see. The stock is at an all-time high right now. So geez, congrats if you own this one. They're a huge company. Wow, I didn't know that. $148 billion market cap. So stock's at an all-time high. That's incredible. Let's go see what the net income is. So revenue's up 1, net income's up 20% though. So that means they're really expanding their net margin there. Margins are up 19% year over year to a 28% net margin. They're making billions every quarter. Look at that, like $2 billion in net income a quarter. So, I mean, I wonder what's the real reason they're at all-time highs. They're crushing it. Maybe it's that margin growth. All right, let's see. I've done multiple quick flips at the bank and they never give me any restrictions. Oh, hey, nice. What about Siemens Energy? Yeah, that's like a weird European ticker symbol. They're on my watch list. I don't know what their ticker symbol is. You know what? SIE, Siemens Electricity. So yeah, here's their stock right here. Let's see how they're doing. Yeah, wow, stock's at pretty much an all-time high right now. Our HVAC has like a little Siemens Electricity box on it. So I guess we've used them before. So yeah, they're European companies, so we'll switch their revenue to US dollars just so we can kind of understand it easier. But yeah, they're in gas services, grid technologies, Siemens, whatever that is. Look at that. It's at a new record quarter there. Pretty good. And transformation industry. What's the net income though? So yeah, they made 830 million in net income in the most recent quarter. That's really good growth. So if you're an EU company, I would be careful of like if you're an American, like I would have to pay some like weird ADR and weird tax form. But anyway, they're cool. Do stocks move on weekend? No, the market is closed right now. So unfortunately, uh, yeah, we can't buy or sell any stocks even if we wanted to. Yo, EWB, no way, dude. Thanks so much for all the roses there, man. No, or the I'm new here. Thanks so much, dude. He said, do you see V&M going? How high do you see V&M going? I haven't heard of that one. Let's check them out though. V&M. Thanks for all the roses, dude. So this is the VanEck Vietnam ETF. So hey, look at that. I know we just did like a tariff deal with them. You know, Nike makes all their shoes in Vietnam. This like McDonald's makes their toys in Vietnam. So let's see how they're doing. What are their top holdings in this ETF? Obviously, I'm probably never going to hear. I don't know what any of these companies are, but these are all the Vietnam stocks right there. And it's market cap weighted. Unfortunately, I can't view any of these. But there, I guess if you're looking for exposure to Vietnam, there's your ETF right there, and it's had a pretty good performance the past little while here. Nice. All right. So someone said, what mobile app? Yeah. Hey, moving forward. Oh, you know what? It's in the link in the description, but someone's asking me in the YouTube chat. Here, let me get the link tree for you. If you go to the link tree in my bio, the very first link there, it's actually the link to this. I'm on a brokerage right here. My favorite software to analyze apps and stuff. But yeah, Ishwar, he said BE Energy. Oh, and I wanted to look at what's AMD. Yo, remind me to look at AMD. Someone said Nvidia as well. Should we look at AMD or Nvidia? I don't know. So here's Bloom Energy. I think this one finally just got like a deal. Because if we go to the revenue right here, the revenue finally started popping off. Or actually, no, it didn't. I'm thinking of a different company. What's that other company? It's something energy. I don't know. But anyway, actually, this looks great. So 400 mil of revenue, up 20%. They still lost net income on that. So, but the losses are narrowing, which is good news. They have a yield, no dividend on this company. Where's the revenue come from? All from the US. All right, well, hey, I want to see that company get profitable. There's been obviously some good news that's really pumped up this stock recently. Nice. So yeah, let's look at AMD right here. So AMD, I do own this one. Yeah, there's Next Era Energy too. All right, so let's see here. Here's AMD stock. This one has had a pretty good performance since its April dip. Here, I'll show you my position in this stock, by the way. Why not? Here's my AMD. Yeah, I got 11 shares of AMD, and yeah, they just reported earnings. You didn't even have to time the bottom, and you could still make a good amount on them. But yeah, that blue line is my average cost. But let me analyze this company for you. I might be biased because I do own them, but here's why I own them. First off, obviously, they sell GPUs, huge market share, 17% PC GPU market share. But one main growth driver has actually been the data center business for them. You know, they're starting to get into data centers. You know, data centers need GPUs, and well, AMD makes GPUs, so they can get the newest models at the cheapest price, the quickest. So they have a real advantage over competitors. So it's genius for them getting into the data center business. It's done wonders for the free cash flow. I mean, look at this. Free cash flow is up, you know, 1.7 or to 1.7 billion of free cash flow this quarter. What was the net income? Net income was 870 million. You know, they also have this monster of a balance sheet, no net debt here. So again, I might be biased here, but I do like AMD. They're starting to grow again. And with that China, they can ship chips to China again, tailwind. That's great news for their earnings. How about ETFs? Yeah, hey, my favorite ETF is just the VOO. You know, it's kind of boring, but this doesn't have boring returns. So if you're looking for a great ETF, check out ticker symbol VOO. It's the S&P 500. Should just return a good like 7-8% a year. Anyway, what app is this? Yeah, hey Stefano, I'm on a brokerage right here. If you want to get this little software I'm on, it's in the link tree in my bio, very first link there. It's an affiliate link too. So if you sign up for this app and deposit $100, we'll both get some free stocks. I love buying my stocks in here, and I keep my cash in here as well. It earns a nice interest. Look at ANET, Arista Networks. Let's see, Arista Networks. So we can look at, what up, BSJ? He said SPUS. Yeah, we'll look at that one next. What up, Felix? Those are really good review, bro. I'm kind of new. Hey, thanks so much, Felix. Yeah, hope y'all are having a good Saturday, by the way. If y'all want to support me, best way is to hit the like button. I would really appreciate that. So here's Arista Networks. Here's why I think this company deserves to be at an all-time high. Usually, if you could just go look at the financials of a company, it usually explains why the stock is either doing so good or doing so bad. So first off, look at the net income on this company. The after-tax profits, it's pretty ridiculous. 888.8 million this quarter, up 35% year over year. Revenue's up 30. That means they grew their margins. They also have a fortress of a balance sheet right here. Let's see what the actual analysts expected. So yeah, they had a nice beat on revenue, huge beat on EPS. They were only expecting 60 cents of EPS. So they triple beat on every metric, and that's why they're at all-time high. Looking for weekly or monthly payouts here. There's like, is it Q? Can't remember the, QDTE. So I don't normally recommend these kind of stocks because they don't underperform the market, or they always underperform the market. But if you're looking to maximize your dividend income, this is an ETF I found that actually pays you weekly dividends. I mean, that sounds stupid, but look at that. You got paid July 24th, July 31st, August 7th. You get paid every week with this ETF. But again, that won't outperform in the long run. But anyway, let's keep going here. I just wanted to bring that up because it's some investors it could be in a good position for that. Let me look at SPUS, then we'll look at Sezzle. So SPUS, I don't know if I've heard of this one. Oh, so it's another ETF right here. Title Trust S&P 500. So the stock or the ETF's at an all-time high. What are its top holdings? It literally just looks like the S&P 500. So first off, look, its largest holding is NVIDIA. So if you put $100 in this ETF, $14.91 of that, first off, just goes to NVIDIA. And then $13 goes to Microsoft, $11 to Apple. So yeah, it's like an S&P 500 alternative. So here's SEZL. This is a fintech company that I really like. Yo, what up, Mafia and Bohummy? What's up, dude? Let's see. Hey, thanks, man. Thanks for subscribing. I appreciate that. We'll look at ICP as well. Yeah. Yo, B-Dish, we looked at Booking Holdings, I think, the first time you said that. Bitmine. Okay, well, anyway, here's Sezzle. Yeah, they fell 34%. This is a fintech right here. And basically, let me see what the revenue was. So they beat on revenue, they beat on net income, and they beat on EBIT. So they triple beat. I wonder why the stock is falling then. I might have to, I don't know why. Maybe it was guidance or something, but I love the margins of this company. Like, look in the most recent quarter, they made 104 mil of revenue. Out of the 104 million, 36 million of that was after-tax net income. The margins on this company are incredible. So I do like Sezzle for that reason. They've deleveraged their balance sheet like crazy. Like, look year over year, the liabilities used to be 85% of the assets. Now it's only 57%. So, yeah, maybe it was bad guidance. I don't know, but it looks like they beat on every metric there. So what is ICP? I look up ICP stock. I don't think I can find that one, man. I do apologize. Maybe it's not on the stock exchange. This is not Webull. No. Let's see. MRK, where's my fork? What's up, dude? This is a healthcare company, Merck. So they've kind of been struggling recently. A lot of the healthcare names obviously have, but here's why this one might be worth looking into. First off, they trade at a 12 PE. Why is the PE ratio so cheap? What is the PE? Well, that's just the price and net income multiple. Well, here's why the valuation is kind of cheap. It's because they lost their growth. Revenue is actually down 1.9% year over year. So that's one thing you do got to be careful with. And the net income is down 18%. So that means the margins did fall a bit. But the best part is that they're just printing money. I mean, they're making pretty much 3 to 4 billion, which is safe for now. But I would like to see the growth come back to the sales there. Sorry, man. My throat is so dry and I'm drinking a bunch of tea right now. Hold on. Jeez. Okay, sorry. I had to mute the mic there because okay. Let's keep going here. What is this one? I just said TTA in stock. What is Service Titan? They're down 7% on the day. Looks like the IPO'd not too long ago. They're not huge and only $9.3 billion company. So $9.3 billion market cap. All the revenue comes from the US. Let's see what the growth is. So this is decent growth. Revenue's up 26% year over year. They are still losing net income, so you do want to be careful of that. They have a really good balance sheet, though, so they can afford to have these net income losses. But I would like to see these losses start to narrow. So they did IPO not too long ago. Let's see. Collection of field services. Huh, so this is more than just a software company. So this is like a real services company. That's interesting. Okay. All right. Let's see. So yeah, hey, we already looked at the trade desk. Give me a minute here. We'll look back at the trade desk. Um, what is Bonfida? Give me the ticker symbol for these stocks and we'll check them out here. So here's Eli Lilly. So this company had disappointing results of their weight loss prescription pill. So normally it's an injection, but they started doing these like pill version and it just didn't have good results. Basically, it didn't work and the stock is falling on that. But for right now, I mean, I think this one's worth looking into. I mean, a 40 PE on Eli Lilly, I mean, okay, this is where it starts to get attractive because check this out. They're so growthy. We look at their largest prescription right here. This is what's so impressive. It's Mounjaro. Look at the growth. I mean, they literally just created this out of nowhere in 2022. The first quarter they made it had 16 mil of sales, then 180 mil, and now literally 3.84 billion just in the past 3 months, which is really cool. They also have Zepbound. This is their weight loss little prescription that they have. They created this one just about a year ago. We're from 175 mil to 2.3 billion this quarter. So they've just been so growthy with the release of all these prescriptions. How's this one doing? Like Verzeniro, that one's up 10% year over year. So basically, they just sell a bunch of different prescriptions and they make a bunch of money from it. Let's see, the net income was 5.6 billion this quarter, which was real. Jeez. Revenue's up 37 and net income's up 90. Margins are growing, 40% margins on this company, 1% dividend yield. Eli Lilly is worth looking into. And here's another kind of healthcare stock. Someone said is J&J worth looking into. I think this one's a bit of a boring one. You should get like 6-7% a year on average, and half of that comes from dividends. So this is like a great dividend play. If you're looking for a higher yielding stock, you get a 3% dividend yield with this company, and they do a lot of stock buybacks. So let me actually verify that. So let's see what the net income was up 18, EPS was up. Oh, so they actually haven't been buying back their own stock. Well, they bought back 0.5% of all the shares, not much. But yeah, kind of slow revenue growth, 5% revenue growth, still decent, still growing, which is good. They're super profitable, let me go to operating profit. Yeah, they're making roughly, 5 billion plus a net income every quarter. Then they just share it with dividends. So yeah, Johnson & Johnson, that's like a healthcare play. They own so many brands like Band-Aid. What is FIDA? FIDA stock. Yeah, I can't find that ticker symbol. It must not be an American, Canadian, or Chinese, or UK, EU company. I can view so many exchanges. I wonder what one that's on. So sorry, I can't view that one, Junior. Let's see. Can you compare it to NVO? Yeah, NVO. So that's the thing. We just looked at Eli Lilly. They own a bunch of different prescriptions. Well, this company also is like one fifth the size, but this one's kind of a pure play for obesity care products. Like, look at this: 93% of NVO's revenue comes from their obesity care products. It just basically comes from Wegovy and Ozempic. And unfortunately, the patent for Ozempic expires in a couple years, which is kind of why the multiple is starting to collapse. I mean, the future uncertainty is starting to rise, so they trade down the multiple. But for right now, the company's printing money. I mean, they're making $4 billion plus a net income a quarter, 3.5% yield. Pretty good. Let's see. What about Chinese stocks? People are worried. So I'll show you my favorite Chinese stock, Tencent. So, oh wait, Tencent. Well, enough. Okay, here we go. This company, if they were American, they'd literally be a Mag 7 stock. This company is a conglomerate. So this is a big gaming company. They're also in fintech. They're in so many different businesses. They're just a conglomerate. So they own Riot Games. So they own League of Legends, Valorant. They own PUBG, player-unknown battlegrounds. They own 50% of Fortnite. They own Supercell. So they own Clash of Clans, Clash Royale. I mean, they're just huge. And here, we'll switch the revenue to US dollars. Look at this. They're literally making 6-7 billion of USD after tax net income a quarter with an insanely good balance sheet. So this company, that's my favorite Chinese stock. Um, all right. Oh yeah, we can look at BKNG. We'll be quick about this one. We already looked at this one, but let's check it out again. So this is Booking Holdings. Basically, they do major buybacks. It's like a travel play. So the PE is a 37. That's actually pretty fair for how growthy they are. Let's see. Revenue is up 16% year over year. They're usually making over $1 billion in net income every quarter. So what is Booking doing with over $1 billion in net income a quarter? Well, this is the best part. They're literally spending close to $2 billion every quarter solely buying back their own stock. So it's a huge buyback friendly company. So the net income fell 41, but if you go to the net income, it only fell 38. That's thanks to the buybacks. And also, this was a one-time adjustment, little net income quarter. It's actually higher than this, but we can still see the power of the buybacks through these same year-over-year numbers. EPS only fell 38, while the net income fell 41. They also have a dividend, 0.7% dividend, 20% payout ratio. So they're really cool. They have a really high margin. All right. Let's see. Bitmine. Hey Gizmo, what's the ticker symbol for Bitmine? We'll check it out. So DEFT, what is this one? DeFi Technology. So they're a bit of a smaller one. This is only an $800 million market cap. So not huge, and only $800 million company. They're Canadian as well. So we'll switch the revenue to USD. What is this? Valor. I don't even know what that is. Let's just go to the revenue down here. Oopsie. Revenue. What is it doing year over year? So the revenue, this looks really choppy. It looks weird. Like, how was it negative last quarter? This is like a weird looking balance sheet as well. The net, they did make net income this quarter. It just looks a little choppy to me. I got to do more research on this company, but I just be careful. $800 million market cap just looks weird. You don't see many companies kind of doing that. Yeah, let's look at SoundHound AI. I wanted to look at that one. So if you own SoundHound AI, there's only one thing you really want to look at here, and that's this company's subscription business, because that's most of the revenue now, and that's what led to the huge gain on the stock. So look, 85% of the revenue comes from their subscription business, and I love subscription model companies. It's all recurring revenue. But look at these growth rates. I mean, look, the revenue's up 600% year over year to 25 mil. It used to be nothing. I mean, the revenue used to be 600K. So the business has just, exploded, or the subscription business has just done really good. So that's why investors are happy, that growth rate there. Yeah, hey, try not to spam there. We'll get to all the stocks here. We'll look at Roblox, and we could look at OKLO. I want to look at all these stocks here. And FGMC, yeah, they're issuing like $3 billion of stock to acquire Boxable. Wait, what was the stock I just wanted to look at? It went away. Roblox. Okay, so yeah, if we go to the Kathy Wood portfolio, so check this out. Kathy Wood, she owns the ARKK ETF. Her second largest holding is actually in Roblox. So has anyone heard of Roblox before? It's like that video game. And the stock's done really good because they're really beating on all the metrics here. So check this out. This is a cool little metric we get. This is their daily active users. So the most recent quarter, they had 111 million daily active users. When the same time last year, it was only 79 mil. So really good increase on that. The free cash flow is very strong here as well. A couple hundred mil of free cash flow a quarter, but I would still be careful. They are losing a bunch of net income every quarter because of the stock-based comp, which is included in GAAP net income. They are a bit leveraged too, but yeah, they're just beating the analyst expectations. Really growthy. Oh, Bitmine is BMNR. Yeah, you're right. That's the Tom Lee company. So Tom Lee is on like the chair of the board here. Apparently, the stock's up like 1,000% since he's started working there. But basically, this company just owns a bunch of Ethereum, right? Ethereum treasury company. So yeah, so let's check this out. Where does the revenue come from? Well, 91% of it comes from self-mining stocks, or like Ethereum, I'm guessing. So yeah, that's interesting. It's probably just gonna momentum does what crypto does. John, I just mean the balance sheet if they have a bunch of liabilities. Let's see here. What site is this? So yeah, hey Aiden, I'm actually on a brokerage right here. It's my favorite platform to buy stocks on. If you want to get this little software I'm on, it's in the link tree in my bio, the very first link there. It's also an affiliate link too, so it helped me out. So someone said, please do Meta. What up, Northern? Yeah, let's do Meta. Yo, what up, Kandri? How's it going, man? Happy Sunday. I mean, Saturday. So here's Meta Platforms. The stock's at an all-time high. I mean, they deserve it too. They're just so incredible. If we look at the multiple right here, like look at this. The stock's at an all-time high right now, but look at this valuation of a 27. I mean, that's not even the highest multiple they've ever traded at. So I believe they have the ability for Meta to really stretch up to like a 30 PE before it starts to get overvalued. But that'll be Meta will be over $800. And this is also incredible. They have literally 3.5 billion daily active users. Like that's nuts. The daily active users here, they're growing their margins. Revenue's up 21, but net income's up 36. So this is a company that just prints money. A $2 trillion market cap, 40% net margins, crazy. And they just acquired $15 billion of Scale AI. Their Threads platform, the new Threads app, is nearing the same amount of daily active users as X. They're introducing ads to WhatsApp after when they acquired WhatsApp. The founder was like, no ads, no gimmicks, no games, and now there's ads on it. Hey, gotta do what you gotta do. So someone said FIX stock. Yeah, hey, that's actually my biggest stock of all time. I got 12 shares of this company. They're pretty much at an all-time high right now. I won't spend too much time on them because no one's probably heard of this company before, but this is your main HVAC play. Heating, ventilation, and air conditioning. That's what most of their business is. They also do the electrical work for you, which this business has been booming, up 50% year over year. But they're also a serial acquirer. The HVAC is such a fragmented market, fragmented industry. There's not one, like for cell phones, there's only a couple companies you can buy cell phones from. But if you just need your HVAC repaired, there's so many companies, all local, that you're going to pick. And they've just been able to acquire a bunch of mom and pop HVAC companies. It's done wonders. Basically, the reason the stock's done so good is just the growth you've gotten as a shareholder via EPS, the net income per share. It's up 75% year over year after being up 93% from the previous year. The net income just hits a new record every quarter. The margins are at a new record as well. They have no debt, doing crazy buybacks. Anyway, FIX is my largest holding for a reason. I have YouTube videos on it as well. So and another one, my second largest holding. So that's my largest holding. Where's my fork said CEG. This is my second largest holding. This is Constellation Energy, CEG. This is actually the largest nuclear energy stock in the world. They own the most amount of nuclear reactors out of any publicly traded stock. Nuclear has been on fire. There's been a bunch of EOs, executive orders in their favor, stimulating the industry. So they're really, like we've seen the administration really switch from solar incentives to nuclear incentives. It's been really cool. All right, what is this one? Let's see here. What up, Blue 4? How's it going, man? He said PROP. Good to see you. Happy Saturday. So this is Prairie Operating, huh? Unfortunately, this stock's at an all-time low. Yeah, very small market cap if you kind of look in the top right there. It's only a $140 million company, so very, very small market cap. What's the sales? So the revenue is finally something. They must have acquired a company or something. Still losing net income, but not that much. The assets just exploded up. So yeah, they must have. Yeah, if we go to the cash from investing activities, we can see if they acquired a company. And basically, yeah, they spent $530 million buying a company, and that's why there's revenue now. And that's why the balance sheet just went up. So I do wonder about that one. Google's doing good. You called it. Hey, yeah, man, Google. Which one of your playlists do you start? Yeah. Oh, I don't really know, Felix. If you want to learn how to really analyze a stock, just go to my YouTube channel. Type in type in Nathan Robert how I analyze a stock, and I'll show you all the financials and stuff that I use to analyze a company. But yeah, by the way, most people would be like, go buy my course. Yo, I have nothing. I have no course. I have no book. I don't sell anything. No one-on-ones. I don't sell anything. So only way to learn from me is just my YouTube videos. Again, best way to support me is just subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. Anyway, hey, Blue414. Thanks again for the 10 roses there. I appreciate that. Yeah, we'll do Amazon after this too. So check this out. Here's Google. Look at the kind of nice rally. Google's been slowly creeping up. Look at that. Google's up 2.4% the most recent day. And here's why I think they have the ability to go even higher. Look at their valuation. Their PE multiple is a 21. So that's the price to net income. I feel like this has the ability to maybe go back up to a 25 That's new all-time highs on Google, which would be great. They've really been expanding their margins. Like, check this out. Revenue's up 13, net income's up 19. So they're growing their margins. Great news. 30% net margins. Google's literally like an ETF in one. They own Android, they own YouTube, the search business, the Google Cloud business. Like, look at just the Google Cloud. I mean, this grows like 30% every year, every quarter to a literal new record. So the Google Cloud business is growing like crazy. They just acquired Wiz for $30 billion. They got into cybersecurity. I mean, they're in quantum chips. They own Waymo. I mean, Google's just so innovative, in my opinion. All right, so let's see. Um, let's see. What up, Dave? He said LAES. Is that Seal SQ or whatever? I haven't really. I wish I could give you more thoughts on this company. I just really haven't found too much value in this stock. Like, look in the top right. First off, a very small company, a $370 million company. And for the full year 2024, the sales were $10 million, down from 30 million the previous year. So they have no sales right now. They're losing money. So it's just a really small company. I'd be careful with. It looks like a momentum stock. I wouldn't put a meaningful position in that one. That probably wasn't too helpful though. I apologize. But hey, what up? Hey, thanks Max for the follow. Why are you not buying? Yeah, the market's closed right now. It is Saturday. I wanted to. Hey, I normally don't stream on Saturdays. I wasn't even gonna stream, but I was bored and I just wanted to. So I appreciate y'all showing up anyway. So here's another stock, Rocket Lab. So yeah, because normally we'd be like showing you, hey, here's how the S&P 500 is doing right now. But yeah, no, the market is closed. Here's my main account, but. Anyway, here's Rocket Lab. This company just reported earnings. Let's go see what the earnings were because I haven't actually looked at them. So actually beat on revenue, miss on net income, and miss on EBIT. So that's the one. There's only one thing that concerns me about Rocket Lab. The only one thing is these net income losses. They are starting to get worse, but they're losing like 50, 60 million a quarter. But it's the revenue growth that has made this okay. The revenue is up 36% year over year after growing 72%. They have a huge backlog as well. Rocket Lab is like a $1.5 billion backlog of orders. So this is still my favorite space stock. I like it more than Lunar and ASTS Space Mobile. Out of all of them, I'd pick Rocket Lab as my favorite pick. But then they have a good balance sheet though. So all right, Joe. Yeah, let's look at Amazon right here. Okay, so yeah, check this out. I do own this one, by the way, in my buy and hold little account right here. And I just bought another share of Amazon as well on this little dip right here. So I was happy to buy more Amazon even at that price because this is such a great company. I just want to own this one for the long run. Perfect like buy and hold forever stock. Amazon's another margin expansion story. So look at this crazy growth. First off, or crazy sales, 167 billion in revenue. Revenue grew 13% year over year. So revenue's up 13, but profits are up 34. So what does that mean? Again, huge margin growth. They now have double-digit net margins, over 10% net margins, when if we zoom out, it was kind of a tough buyback here. Margins were even negative at one point. So margin expansion is crazy here on Amazon. They're also so CapEx heavy, and I actually like this about the company. This is why they're so growthy. Look at the cash from investing activities. They invested 40 billion just in the most recent quarter into buying new companies, buying new property, investing in themselves. I mean, great news. I love that CapEx number. Hey, buddy, pull by yesterday on some stocks you looked at. What are your thoughts on BOXL? What up, Eric? BOXL, Boxlight. Hey, so let's check it out. So again, this is one we don't really cover these kind of stocks. If you look at the top right there, look at that market cap. This whole company is worth $5 million. And so it's hard to trust a company like that. So unless you're like swing trading this or trading it, I would not trust to buy and hold this one. Yeah, the revenues collapsed. Revenues down 40% year over year, losing net income every quarter, leveraged up their balance sheet. I mean, they used to have more assets than liabilities. Now they have more liabilities than they have assets. So everything's headed in the wrong direction, and that's kind of why this is a $5 million company at all-time lows. So again, it's how much careful from a financials point of view, Eric. That one's not great in my opinion. So, Shopify, what up? That's a Kathy Wood stock. Let's see here. So if we go to Kathy Wood's portfolio, one of my favorite stocks that she owns is actually Shopify. They're so growthy, man, and they had a nice day. They were up like 25% on the earnings day. And check this out. If we just go to their annual revenue right here, this is what you want to see for a company. Now, this is a stock I can trust. more than that last one that we looked at. I mean, look at this annual growth. I mean, the revenue in 2019 was 1.5 bill. Now it's 8.88 billion for the full year 2024. Let's see, what's the free cash flow? Yeah, look at these free cash flow numbers. They're printing free cash flow every single quarter. A couple hundred million net income every quarter, a fortress of a balance sheet on Shopify as well. So yeah, I can see why they're doing so good, so growthy. I really like them. I want to know this app you're using. Oh yeah, hey, I'm actually on a brokerage right here. So if you want to get this software that I'm on, it's in the link tree in my bio, the very first link there. It's also an affiliate link. So if you sign up and deposit $100, we'll both get some free stocks. But you don't even have to deposit any money to use all the tools and stuff. But anyway, yeah, I buy all my stocks in here, keep my cash. Lowest fee brokerage. And I love doing analysis on here. Or you can just type it into Google. It's a brokerage called Moomoo. Anyway, here we go. Or if you don't want to use my affiliate link. But someone said APP, app loving. Oh, yeah. Hey, what up, Mike? We'll check out IMPP. Well, what up, Remco? We'll look at ACN as well after this. So here's an incredible growth company that I love. This is app loving. Huge advertising business now. Check this out. If we look at their advertising solutions, well, let me just go to the revenue because it'll make it easier. Revenue's up 77%. So revenue's up 77 and net income's up 160%. So on their literal 1.3 bill of revenue, 820 million of that was net income. Incredible net income on this company and free cash flow. Look at these free cash flow numbers. They're printing money. They're making well over 2 bill, 3 bill of net income and free cash flow a year. So that's why they're so growthy. If you're ever wondering, like, how does a stock literally go from $50 to 100 or to 500? Well, they got to have incredible growth, and this is incredible net income growth, like crazy. All right, so let's see here. I wanted to get at IMPP has great financials. Let's check it out. Petroleum stock. And we'll look at ACN. All right, so here we go. This stock, yeah, so it's a petroleum stock. So again, they're probably going to follow the price of oil. Sorry, let me get my tea real quick. My tea's gone cold. So actually, this is rare for an oil stock. This is a fantastic balance sheet for an oil stock. No debt at all. Let's see how much cash. $277 million of cash. So like record amount of cash on hand. That's great. Are they net income positive? So what's the market cap? Hold on. Let's do some real analysis here. So whoa, this is weird. So the whole company is worth $100 million and they have no debt and $227 million of cash. So they have literally twice as much cash as their entire market cap. So that's weird. And they're making net income every quarter as well. Where does the revenue come from? Just worldwide. Okay. I got to do more research on this company. No dividend as well. Operates as a ship-owning company. Provides petroleum product transportation services. Huh. Well, anyway, that one is interesting. I can't believe it. They have twice as much cash on hand as they do market cap. So maybe that one's worth looking into. Oh, here's a company that's on my watch list. This is ticker symbol ACN. And wow, they've kind of been bleeding out recently. I do wonder what happened with this company. Let's go see if we can figure out why the stock has kind of been struggling recently. Did he go over LOI? We did go over Eli Lilly a while ago, but we can go over them again in a little bit. By the way, if you missed anything, the best way to support me is to subscribe to my YouTube channel, watch the stream from YouTube. My YouTube channel is called Nathan Robert. You can just type that into YouTube, or it's in the link tree in my bio. But yeah, after the stream's over, it'll be available to replay, or you could replay it right now, whatever. So anyway, here's ACN. This is what I love about ACN stock. Look at this bottom line here, the net income. I mean, they're making, billions in net income every quarter. What's the balance sheet? Good balance sheet as well. So I just love the profits here. Literally making $2 billion plus in net income a quarter. What are the margins? 12% margins. What's the PE? The PE is a 19. Why is the multiple so low? I mean, look at that. The industry average is a 23. They're trading at a 19. So do they pay a dividend? Yeah, look at that. You get a 2.5% dividend yield here. So interesting. Okay, can you look at the S ticker symbol? Yeah, let's check it out. Is that Sentinel One? So this is one of the few stocks with a single letter ticker symbol. The only ticker symbol is letter A. Yeah, thanks, Mike. I appreciate that. So here's Sentinel One. This is a financial company. So they're in like merchant revenue and stuff. Here's why I think the stock is still at like all-time lows since their IPO. I believe that because of these net income losses. So they did just get a little worse this quarter. They lost 200 mil of net income. They're usually losing like 70 mil. So we just want to see this company finally start to get close to net income positive. The revenue growth is pretty good, up 22% year over year, but I think it's these net income losses that are hurting the company. Yeah, the debt did go up compared to the assets. So, but I think this one might be oversold. I don't know. There is the valuation is infinite right now because they don't make any profits in terms of PE. Can we see what stocks you are invested in? Yeah, hey John, if you go to my YouTube channel as well, I do portfolio updates all the time. I share every single stock that I own, how much I'm up and down on them, my total return. I love being fully transparent. How are we doing year to date? Year to date, yeah, we're up 42% in this portfolio. We're up so much year to date in this account, literally thanks to Comfort Systems. I mean, this stock has had a monster of a rally. And Amphenol Group. Has anyone heard of Amphenol? This is the company that's supplying NVIDIA with copper. So NVIDIA has this new NVLink spine product that uses 2 miles of copper cables in this little 5 foot spine computer looking thing. And it's supplied by Amphenol, which is pretty cool. Anyway, are you on TikTok? Yes, Sam. I'm actually streaming on YouTube and TikTok right now. Yes, sir. Although I encourage you to stay on YouTube because I'm trying to build my YouTube stream. So for y'all on TikTok, I'd appreciate, I got like 70 on TikTok. I'd appreciate if some of y'all would go to the YouTube stream, watch it from there. Anyway, let's keep going here. I thought it was cybersecurity. Maybe it is. I forgot what stock we were talking about there. All right, let's keep going here. OKLO. So here's another nuclear stock. And I've looked into this one. They've been trading with all the nuclear momentum right now. But there's one thing why I choose other nuclear stocks is because they're still a startup. If we go to the revenue right here, it says no data because they don't sell anything. They don't sell a product or a service, so they don't sell anything. But they're backed by some strong people. They want to make like mini small nuclear reactors. Hey, John said I'm ahead to the. Hey, thanks so much, John. I really appreciate that, man. So, yeah, Oklo, great balance sheet, no debt, lots of cash, but they just don't sell anything for right now. So the fact that they're a startup has me a little concerned. So the valuation is a little high. So if I wanted nuclear exposure, I'd go with like a VST or a GEV, or better yet, a CEG. This is my favorite nuclear play. This company owns literally 50% of all the U.S. nuclear energy reactors. Largest pure play for nuclear energy. There's no other pure play than nuclear besides CEG. Obviously, this one is like a nuclear momentum stock, but again, they have no assets. They don't have any reactors. $11 billion market cap. It's an $11 billion company with no revenue. So it's just momentum. And that's kind of the same thing with Joby Aviation. Someone's saying in chat, Michael said Joby. Here's another thing. Here's why I kind of just stay away from these kind of stocks. So look at the market cap here. $14 billion market cap. But if we go over here to the company's revenue, again, this is another startup. The revenue was $15,000 in the most recent quarter. Like I could mention so many other stocks with like half the market cap, like a $3 billion company, a $5 billion company with way better fundamentals. So it's just tough buying this one. So here's Joby Aviation, for example. This company did 15,000 of revenue, worth 14 billion, and they're losing a couple $100 million of net income every quarter. I think people like this one though because if you go to the shareholders, this is the one good news. It's kind of backed by Toyota Motor. Check that out. Toyota owns 15% of all the shares, but again, that's not going to convince me to buy it, in my opinion. I just stay away from the revenue of this company. It's kind of like TMC. TMC is another one that's still hasn't made any revenue yet. But yeah, that's just my honest thoughts on them. Again, I'm no expert, but if I'm looking for a stock to trust, to just buy and hold forever, I want to see one with real profits because then they can pay dividends. Whenever a company's making money, they can buy back their own stock. They can acquire a company. They can pay dividends, return money to you. So that's my opinion on that. IXHL. What up, Issa? What's up? He said IXHL. What is this one? I don't know if I've heard of this one. So yeah, we don't really cover these kind of stocks. Again, if you look in the top right there, this is a $41 million market cap. So again, the whole market cap, the whole company is worth $40 million, and they lost $4 million of net income this quarter, which is 10% of the market cap. So they're in a dangerous spot right now. Like honestly, some real chance of bankruptcy. The revenue was 12,000. So again, I no real value there. I'd be so careful. I wouldn't buy that one. I'd maybe do a trade on that one, but I definitely wouldn't just trust to buy and hold it. Do you do options? Not right now, Happy. I actually have no options open. My favorite thing to do is just buy, kind of dime in hand, buy and hold for the long run. Great high quality stocks, like all these companies right here, like Google, Meta, McDonald's, United Rentals. I love all these companies. They're a third phase bio stock. Oh, okay. Yeah, I'd be careful with that one, Issa. But I guess if it works out, you can make it big there. But again, be careful here. Nvidia, yeah, we can look at Nvidia too. We haven't looked at them in a while. All-time high, obviously. So first, congrats if you own this company. One thing I would point out is like the market cap on this one. It's almost too big to double. Like, look at the market cap. It's worth 4.46 trillion. So that's a huge market cap, 4.46 trillion. For this stock to double, it would have to go to an $8.8 trillion market cap. So the upside potential is limited. Like, the max this could probably do is double, but maybe 1.3x or something from here. So it's tough buying this one at all-time highs. But again, they've been a great performer. I mean, huge GPU market share, 20% PC GPU market share. You have automotive software that Lucid uses for their cars that Uber just ordered $1.25 billion worth of. The revenue growth is crazy. The profitable growth here, I mean, they're making close to 20 billion of net income every quarter, and it's just going to continue to grow as well. Fortress balance sheet, cash from operations is at a record. Yo, John, hey, thanks for coming up for the to the YouTube stream. Let's see. Look at DocuSign. Yeah, I wouldn't buy DocuSign. They're just too slow growing. No real value here. It's kind of like a Zoom. Like, I own it just because it's too cheap to sell. I kind of want to get rid of DocuSign. I kind of want to get rid of Zoom and UiPath, but they're too cheap to sell. Like Zoom is a debt-free company. Like 50% of just their entire valuation, their market cap is just cash on hand with no debt. And they make a couple hundred mil a quarter. It's kind of like DocuSign as well. DocuSign has no debt at all. $14 billion company, making a lot of free cash flow, 200 mil plus, but they have slowing revenue growth. Like, the revenue's only up 7.6% year over. So they're growing mid-single digit, 7%, not great. So luckily they are now getting profitable as well, but software has been tough to hold. Like, Salesforce has been falling like crazy. Adobe's been falling like crazy. So honestly, if I was looking for a software stock, one of my favorite ones, if you're looking for the highest quality pick out there, check out ticker symbol NOW, ServiceNow. I love this stock, dude. I don't own them, but I'd love to. How about Visa? Yeah, let's check out Visa. What up, Kevin? So Visa stock right here. I think, actually, let me go to Nancy Pelosi's portfolio again. I think she has a pretty good stake in that stock as well. Maybe I'm wrong. Visa, yeah, so there's Visa. So yeah, this one is like a perfect buy and hold forever stock. Great dividend growth company. I mean, check this out. The PE is a 33. They do so much buying back their own stock. So look at this net income right here. I mean, they're making 5 billion of net income every quarter, and they spend pretty much all this net income on buybacks. So check this out. Look at this net income year over year. Net income grew 8.2%. But your return via EPS, your return is up 12%. That's the power of the buyback. So net income's up 8, but net income per share is up 12, thanks to there being less shares that exist. And here's how we can see that. If we go to their stock buyback program, they literally spend over $4 billion every quarter solely buying back their own stock. So they have so much money to play around with. I mean, their dividend only cost, look at that, $1.1 billion a quarter. They're spending 5x the amount on buybacks than they are on dividends. So they have so much room to raise their dividend, get a 0.7% yield here. Look, they raise their dividend every year. So Visa's a cool one to just buy and hold forever. Nice dividend growth there, nice buybacks. AMD, so yeah, AMD, actually I own AMD. I kind of agree with you there. AMD doesn't have that same kind of market cap issue as Nvidia. So yeah, I do own some AMD stock. XYZ sold off on Friday. Let's check out XYZ. Well, Visa followed. Hey, I got no clue. I wonder though. So let's see. XYZ is actually Cash App. So if anyone's heard of Cash App before, this is their stock publicly traded. Yeah, look at that weird candlestick. So yeah, they reported earnings, initially went up on earnings and fell. So yeah, yikes. Let's go see what the earnings were. So yeah, look at this. We can see roughly 68% of the revenue comes from Cash App. They missed on revenue, beat on net income, and beat on EBITDA. So look at that net income number. Wow, actually, so they're making a couple $100 million net income every quarter. Yeah, that's real. It really grew 56%. So the profits have kind of exploded. I think investors aren't too happy with the slowing sales growth. Like, look, the lifeblood of the company, the revenue, is actually down 1.6%. But the margins have been great. I mean, the margins have really expanded. So that's the good news. Wait, let's see. Jack Dorsey owns 8% of the shares. So yeah, that's Cash App stock. And they own Square. How's Cash App doing? All right, so it's down 7% year over year. That might be why the revenue's down. Um, really been enjoying watching your streams. Keep it up and thanks for the transparency. Hey, yeah, thanks, John. I really appreciate that. You Futu Holdings, you invest that in Webull? Yeah, I do. FUTU stock is one of my favorite holdings out there. So you know what? Here's kind of a cool thing. If y'all are wondering, hey, what is FUTU stock? Well, you guys see this app I've been using this entire stream, this little brokerage that I'm on, is that stock publicly traded. So this software I'm on right now, this brokerage that I'm on, this is their stock publicly traded. So let's see how they're doing. First off, this app has 26.3 million number of users. Client assets are at 106 billion. So yeah, they're a brokerage, so they make a lot of brokerage commissions. Look at the growth there. I mean, it's exploded. Also, the interest income, that's what's so cool about this high interest rate environment. You can earn a bunch of interest. So yeah, it's good to know that this little app I'm using is, even if they were to go bankrupt, you're still FDIC insured for 250K, but it's cool to see that the app I'm using is making a bunch of net income. So it's super safe. So anyway, yeah, this is my favorite brokerage to use. I do own some of the stocks. I'm not biased, but if you want to get this little app I'm on right here, they're publicly traded too. But if you want to download this app, this brokerage, it's in the link tree in my bio, the very first link there. It's an affiliate link too. So if you sign up and deposit $100, we'll both get some free stocks. I think we both get 5 free stocks. So anyway, the CEO of Moomoo is a good friend of Nathan Robert. Hey, I wish, man. Oh, I wish. But I do love their little app, and I do own some of their stock as well. So hey, there you go. Anyway, let's keep going here. What's your winner? Oh, Hims. You know what? We'll look at Hims too. So I would honestly pick Eli Lilly. If I had to pick one of those, Isha, I'd probably pick Eli Lilly as like the safest name out there. Probably will have maybe the best performance. But check out Hims and Hers. A lot of people think this is a meme stock, but they've had a lot of growth recently. Look at this year-over-year revenue growth, up 72%. And not just revenue growth, but profitable growth. They made 42 mil of net income on that. They just rose some debt, so that's why their balance sheet just like grew a bunch. So if we go to their cash on hand right now, look at that, how it just spiked up from the previous quarter. They now have $1.14 billion of cash. They also issued $1 billion of debt, so that's why the assets and liabilities went up together $1 billion from that cash issuance. But anyway, this is a company making a 200 mil plus in net income a year. Free cash flow is pretty good, growing, but they did just lose their partnership with NVO. So this company, Hims, used to sell Ozempic on their website. They used to sell a weight loss prescription, and it was doing great. It was leading to a lot of growth, but now they no longer sell that. So there is some growth concerns in the future because they no longer sell that. So yeah. Don't you think APH is really expensive? I absolutely believe APH is expensive, but they're so growthy is why as well. Like if we go to this company's revenue year over year, revenue is up 56% year over year. And the net income's up 108% year over year. Another company that's just expanding their net margins. Great news here. They also just acquired CommScope. This is their biggest acquisition ever. They acquired a company for $10 billion. Well, the whole company's worth 134. I bought this company at like a $70 billion market cap. So like they did a huge acquisition. They acquired, here I'll show you, Amphenol Group just acquired COMScope, and it's actually supposed to be accretive to their EPS. So that's kind of why this stock has rallied up so much. But yeah, Amphenol just acquired them. They're like communications arm for like 10 bill. What's your thoughts on SOUD? What is SOUD? I can't find SOUD, Kevin Banks. I can't find that one. Is there any Woodsuckers so that we can? No, hey, there's not Lee Max. Hey, yeah, watch out for people impersonating me. I have no course, book, Discord, WhatsApp, Telegram. I got none of that. How are you feeling about Fubo TV stock with the ESPN merger? So yeah, the thing is, Fubo already 70-80% of all the shares are owned by Disney. So first off, Disney can do whatever they want. They own 70% of the voting rights, and that's already gone through. That's what this huge net income inflow was. This was the payment they got from Disney, and unfortunately, the business is starting to slow. The revenue is only up 3.5% year over year, and they actually lost money on that, but basically, it's kind of just in the hands of Disney. I think the max this stock could do is go back to that little buyout $6.50 price. It can't really go much more than that. So honestly, nothing's really blowing me away there for Fubo. My side of the bet is just Disney. I got 15 shares of Disney, and they had some good earnings, but the stock fell anyway. But yeah, that's my side of the bet. I just own Disney stock because the limited upside on Fubo. All right, let's see here. Would you invest in Palantir? I would. I'd love to own some Palantir, but the valuation is just too high in my opinion. SOUN. It's called sound. Oh, he said SOUD. Okay, yeah, that's what I thought he meant. SOUN. Yeah, we can check out SoundHound AI. All good. So yeah, this one right here, this stock, you basically, if you're into this stock, you really just want to watch one thing and one thing only, and that's this company's subscription business because it's been booming. This time last year, the revenue was 500,000. A nothing burger. Now it's 25 mil, up 600%, and at this crazy growth rate. If it continues to grow like this, what's it going to be at this time next year? And they had a huge beat on revenue. Analysts were expecting 32 mil of revenue, and they made 42. So they're going to beat this expectation. Then they're going to beat this one. So they're just a growthy company. Would still be careful. They are still losing a bit of money. Losses are getting worse, but investors are really happy with that subscription growth. All right. So, all right. How going to invest in Visa this coming Monday? Thanks for explaining the Visa. Yeah, IDK, man. Visa, in my opinion, is the perfect just buy and hold forever stock. Don't really trade it. Just hold it for the long run. They do incredible buybacks. They're so shareholder friendly. They literally spend all their excess net income just buying back their own stock. Visa's really cool. I'd happily buy and hold them. How about SEH? How about SEHD ETF? So yeah, if you're looking for a dividend play, SEHD has like a collection of the higher yielding stocks, like the oil stocks, like Chevron. That's one of Warren Buffett's stocks. PepsiCo, Coca-Cola, AbbVie, Merck, Verizon. A lot of the higher yielding names. Let me go to Buffett's portfolio real quick. I think here's Warren Buffett's account. These super investors like Nancy Pelosi, Warren Buffett, they literally have to, by SEC law, make all their trades public. And yeah, look at that. 6.3% of his portfolio is in Chevron. Chevron has a good yield. What is it? Yeah, Chevron has a 4.3% yield. What about APLD? Yeah, APLD, hey, since we're over here, that's in the NVIDIA portfolio. So if we go to NVIDIA's holdings right here, one of the stocks they own is APLD. It's 3.35% of their portfolio. And APLD just had a huge partnership with CoreWeave. So I think it's kind of orchestrated by NVIDIA. I guess that's kind of the benefit. So I wouldn't just buy a stock because NVIDIA owns it, but basically it's really helped them out now. NVIDIA had put a partnership between APLD and CoreWeave. So that's kind of why they've been doing so good recently. I don't know. I'd still be careful with that one, though. I wouldn't have a huge position in that one. What do you think of the CSL earnings after the dump? How do you feel about their valuation? Yeah, CSL, that's my third or fourth largest holding. Probably you've never heard of this company, but they just repair roofs and do insulation. So kind of a boring industry, but that's kind of why I like them. They're just in a boring industry. And the reason I love them so much is because of the share buybacks. So check this out. If you go to the net income year over year, they had a one-time adjustment because of an acquisition. It's tough to look at. So actually, we got to go here. They actually just had a record EPS quarter. So $5.88. Remember that number, $5.88. Besides this one little one-time adjustment, they had a record EPS quarter. So record earnings per share quarter. And that's because of the buybacks that they do. So if you head over here to the buyback program. So if you're looking for a shareholder-friendly company, here's one that literally spends a couple $100 million every quarter buying back their own stock. And they also pay a dividend. The dividend only cost $43 million. So look at this. The cost of the dividend went down from $45 million because they bought back their own stock. Whenever you buy back your own shares, you don't have to pay dividends to those shares. So it literally makes the cost of the dividends go down, gives you more ownership in the company, and basically forces the stock to go up. So incredible buybacks on this company. And if you look at the dividend, you get an over basically 1.1% yield, a 13% payout ratio. They've been raising their dividend for over 50 consecutive years. They're now a dividend king. So anyway, I like that one. Perfect buy and hold stock as well for dividends and buybacks. And there's my position. I'm up 10% all time. They have had a kind of tough month with that huge dip right here on earnings. But yeah, basically they showed some slowing residential roofing repairs, like the residential market, which is like 25% of their total revenue exposed to residential, showed some slowing. All right, let's see here. What are your thoughts on MSFT? Yeah, Microsoft. This is another perfect buy and hold stock. I mean, the cloud business is booming on Microsoft. Microsoft just took a 1% market share away from AWS. So did Google. Google and Microsoft Clouds both took 1% market share away from AWS. And yeah, check this out. So they have three main segments of revenue: productivity and business, the intelligent cloud, and then the personal computing, of course, Windows computers. But look at their intelligent cloud business. This is what you want to see for a stock. I mean, it's up 25% year over year, literally to a new record, 30 bill of revenue, and the net income is ridiculous as well. I mean, Microsoft's making 25 to 28 billion in net income every quarter. They have a better credit rating than the U.S. government, half a percent yield almost. So Microsoft's a beast, man. Another one. Weeble better. Hey, I also have Weeble as well. I also have, but I've compared all these apps before. I actually find this app is more useful than Weeble. I made a YouTube video as well. I do a YouTube video where I compare all three of these little brokerages here, and my favorite one for most useful tools, lowest fee, would be this one right here. Anyway, let's keep going here. Let's see. Yeah, we just looked at all these stocks. We just looked at APLD. Um, let's see. Archer Aviation, we just looked at them too. Eli Lilly, or maybe it was Joby Aviation. We could look at Archer Aviation too. That one also is a revenue-less startup. Archer Aviation has no revenue and loses hundreds of millions a quarter. So it's tough to pay their market cap as well. But here's Eli Lilly. This is one I'm actually looking into buying. The only reason the stock fell so much is because of bad results from their weight loss prescription pill. So they have this injection form, but they're trying to make a pill version, and it had bad results. I don't think that the valuation should have collapsed over $100 billion. But here's what I love about them. They sell a bunch of these different little prescriptions here. Like look at Mount Jaro, for example. This one has been an incredible performer. Like they made this in 2022. When they first started selling, it was 16 mil of revenue, then 100 mil, and now it's literally 3.9 billion just this quarter. So incredible growth there. Then there's Zepbound. This is their weight loss prescription. Went from 175 mil to 2.3 bill. So just incredible growth on Eli Lilly. Same with the net income. I mean, 5.66 billion in net income. Revenue grew 37, so that means they're growing their margins. What about free cash flow? Hey, they're investing in the future, so free cash is a little choppy, but still, I love them. I a bit dated this on YouTube. Hey, what up, Mark? I appreciate you, man. Let's see. What's your highest conviction stock? Ooh, like for the future, I don't know. It's like it would be this stock right here, FIX. But looking into the future, I don't know how much more upside there is, but it's this one because that's what I put most amount of my money in. But recently, I've been buying a bunch of Coca-Cola Consolidated. This is the Coca-Cola bottling company. I've been loading the boat on that stock. And I've also been buying a bunch of Progressive Corp. If anyone's heard of this insurance company, there's kind of like my buy order down there. I've been buying some more Progressive as well. I think Progressive is such a great buy and hold stock. So, can I ask why you split your shares in different platforms? Yeah. So basically, someone's wondering, yeah, why do you have three different platforms here and keep stocks in all of them? Basically, there's no burden to having multiple portfolios. I mean, it's just an extra little 1099 form, filled out sheet of paper they hand you at the end of the year. So there's no burden of having multiple portfolios. I like kind of psychologically having different portfolios separated. Like for example, I have different goals with each portfolio. This is my dividend growth portfolio. Every stock in this portfolio pays a dividend. This one, if you kind of look at the top left, it's called my buy and hold portfolio. Once I buy a stock in here, I try and just buy and hold it for the long run and never sell it. And then this is my risk on portfolio where I own a lot of riskier kind of stocks that have higher growth. Like Robinhood, man, we're up 730% on them. Crazy. And I can kind of do whatever I want in here. I'll do trades sometimes in here, swing trades, short-term stuff. So anyway, let's keep going here. Let's look at some more stocks. What is USAR? What up, Justin? USAR stock. USA Rare Earth. So $1.5 billion market cap. So I know we're trying to get more rare earth minerals from the US instead of from like Russia and these other companies. But yeah, it looks like they don't sell anything yet. They have no revenue. Net income was 51 mil this quarter. I don't know how that's possible with no revenue. The balance sheet, the liabilities just went up a bunch. I don't know what just happened there. So they sold an asset last quarter. They sold off 250 million of assets last quarter. So I don't know. I gotta do more research on that one. They seem a little bit choppy and stuff on their financials. But yeah. Yeah, hey, let's see. What do you think of MEHCQ? 23andMe Holdings. Huh. What do you think of 23andMe? This is like that DNA company or whatever. Man, look at this. So they're a very small company, actually. If you look in the top right, they're only $110 million market cap. So that's a very, very small market cap. Yeah, personal genome services. Looks like the business is down 41% year over year. The business only made 19 mil of revenue. They also have this telehealth business, which, this isn't really the trend you want to see. They're just going down double digits. And yeah, revenue's down 37, losing 20. So that's devastating. Look at these net income losses. They're losing over 20 million in net income a quarter, and the whole company's worth, 110 mil. So how do I switch my Moomoo from margin to cash account? I'm new. Oh, hey, it doesn't really matter. Yo, I actually have a margin account on Moomoo, and I just never use margin. So that way you get the instant deposit bonuses. So what I would do is you don't really need to switch, and if you go to support, they'll easily help you out there. But I have a margin account, but you have to go out of your way to use margin, and I never recommend to use margin. But you'll know if you're buying with margin on accident. So anyway, which I've never done before. I wouldn't recommend taking out a loan to buy stocks ever because you're taking out a loan at like 7, 8% interest rate. You first off have to invest that money and get an over 8% return. Then you keep any money on top of that. And already getting an 8% yearly return, that's what the S&P 500 does on average a year. So you have to beat the S&P 500. Anyway, you kind of get, anyway, let's keep, yo, homie 307, how's it going? Not going to invest. Yeah, IDK, what's up, man? Matthias, I think your name is. Sorry if I said it wrong. He said RZLV. Is that Resolve? So Resolve AI. Have I heard of this one? Yeah. Again, I'd be careful with this one. If you look in the top right, $750 million company, not a big market cap. I would be careful with that. Look, the revenue comes from the UK, so this is a UK company. Do they have any sales? So for the full year 2024, the sales were $180,000, and they have more liabilities than they have assets. Again, yes, $700 million market cap. Be super careful. Probably just a momentum company. Wouldn't really trust that one. So what is this? Josh said ONDS. What is ONDS? Ondas Holdings. What's this one? So $630 million market cap. So again, another really small one, but looks like this one's kind of been on a nice little uptrend recently. Ondas Autonomy Systems. Looks like the revenue is starting to go up finally, but again, it's small numbers. Revenue's up from 600K to 4.2 million. So it's good that the revenue growth is there, but yeah, they're losing a lot of money. 10, 15 million in net income a quarter. And the market cap is 640 million. So I'd be super careful with this one as well. But yeah. Yeah, hey, I hope you guys having a good Saturday. You going to a university? Yeah. I'm a college student. Yeah, I'm definitely no expert. My first day of college starts back on Monday. Ah, all right. Check out SN stock. Hit a nice call option on this next week. SN stock. Let's check it out. So, Shark Ninja. Okay, so hey, if anyone's heard of yeah, hey, it's a good day when my phone is charged. Yeah, I charged it. This never happens, but I left my phone plugged in overnight, and I woke up and the phone was fully charged. Let's go. So here's Shark Ninja. This stock owns those Ninja blenders. You've probably heard of before. Cleaning appliances, cooking and beverage stuff, food preparation. So surprisingly, they make a lot of money. They're making over 100 million in net income every quarter. It's up 105% year over year. Deleveraging their balance sheet. So hey, actually, Shark Ninja surprisingly doing well. They're kind of like a Yeti. Has anyone heard of those Yeti cups before? The Yeti coolers. They're such like unique companies. It's tough to really invest in this one though. But yeah, here's Yeti Holdings. They make those Yeti coolers and Yeti cups, and how they're making net income every quarter too, right? Yeah, look at that. They're making like 50 mil a quarter. Maybe they could merge together. Are you from Florida? No. Let's see. Thoughts on Cadence? Yo, I remember that company. What's the ticker symbol for Cadence Design? I think. Oh man, graduated from college 2 years ago. Yeah, I'm on the grind right now. I appreciate y'all. Um, why was it tough to invest in? Oh, Yeti Cup? Just because this stock really doesn't outperform the market in the long run. I mean, they're the same price as they were back in 2019. They just sell a commodity. Like it's hard to really. It's not like some software company. They're not that growthy. All right. Dutch Bros stock, APLD. Yeah, APLD, we just looked at them a couple minutes ago. So, out of respect for the people that have been here, I'm going to wait a little bit before we cover them again. But, oh, what up, Luffy? We'll look at GT. Um, Let's check them out. So here's Dutch Bros. This is like a Starbucks competitor. You know, Starbucks has been struggling, but Dutch Bros had some good numbers actually, I believe. Let's see. So yeah, they beat on revenue, they beat on net income, and they beat on EBITDA. So it was a triple beat. 91% of the revenue comes from their company operated shops, and it's just seen some really good growth. For a restaurant in this environment, this is pretty good. 30% year over year revenue growth, and on that, most profitable quarter ever. Profits, net income grew 73% year over year when the revenue is only up 27, so they're growing their margins. So pretty cool for Dutch Bros. Let's see. Shark is also putting a nice fight against Dyson. Their new vacuums are legit. Oh, that's interesting, homie. Really? So CDNS stock. So Cadence Design. Then we'll look at GT. Yo, remind me to look at GT. What happens is, oh yeah, hey, I'm actually on a brokerage right here. So if you want to get this little software I'm on, it's in the link tree in my bio, the very first link there. Brokerage called Moomoo. You can just type it into Google, called Moomoo. But anyway, here's Cadence Design. They've had an absolute monster of a performance. I know they have like harnesses with NVIDIA for like server installations or something. Let's see. Core Electronic Design Automation. Well, let me just go to revenue down here. So revenue's up 20% and net income fell 30. Was that real? That was not real because we can go to the operating profits. So revenue's up 20%, so pretty good growth there. Making, close to 200-300 mil in net income every quarter. So what about free cash flow? Yeah, free cash flow is 300-400 mil a quarter. So hey, the valuation might be a little high on this company though. What's the price to sales on this company? Price to sales are, oh, it's actually an 18. That's not too terrible. It's not 150 like Palantir. All right, so if you had 500 to invest in, what would you invest in right now? I'd probably what I have been buying recently, and if I'm looking for stuff at good valuations to buy right now, I'd buy Coca-Cola Consolidated. I'd buy some of this. Again, not financial advice here. I'd first off buy the S&P 500. And after buying the S&P 500, I'd look for some individual companies. I think Coca-Cola Consolidated looks pretty good on the valuation. And Progressive Corp. I've been buying the dip on Progressive. I think it's like an insurance company. I think the valuation looks pretty good on that one. And someone said, why Coca-Cola instead of Pepsi? Actually, this Coca-Cola I'm talking about isn't even the main Coca-Cola. This is Coca-Cola Consolidated. This is the bottling company. They're only worth $9.9 billion. I love the CEO. I've met him personally. They have a dog cheap valuation, nice dividend. So look at this right here. They have a 0.7% dividend yield. And look at the payout ratio to the right of that. It's a 5%. So a 0.7% dividend yield at a 5% payout ratio. Look at Apple. Apple has a lower yield, a 0.44% dividend yield, and a 16% payout ratio. So they have 3x the payout ratio for a lower yield, just to kind of put that into perspective. But I just love this company. They're also, I can't wait to share this. Check this out. So if we go to the net income year over year, it's kind of the green number. The net income grew 8.4% year over year. So net income's up 8.4, but your return as the shareholder through EPS is up 16%. That's because this company has literally bought back 8% of the entire shares, 8% of the entire company in the past year. So anyway, the earnings, grew 8%, but since there's less shares that exist, it made the EPS go up way more than 8%. So that's, anyway, let's keep going here. PROG, I like it. What is this one? Maybe you're talking about Progressive, or are you talking about PROG stock? Let me know, big mans, and I'll check it out for you. Yeah. Honestly, there's the S&P 500. Yeah, what up, IDK? And then there's also QQQM. So this is another kind of tech-heavy ETF that this one has historically outperformed the S&P 500 because it's a bit more tech-heavy. But yeah, if we go to the top holdings here for this ETF, QQQM, it's all the top companies you've heard of before. NVIDIA, Microsoft, Apple, Amazon, Broadcom, Meta, Netflix. These are all companies that I'd happily hold individually. I'd happily just buy and hold all. I trust all those holdings. So yeah, they're pretty cool. Whatever. Yeah, hey, thanks there, Millers. Yeah, hey, if you want to get this little software I'm on, this little brokerage, it's a brokerage. It's in the link tree in my bio, the very first link there. Also, if you sign up, it's the very first link there. It's an affiliate link too. So if you go and deposit $100 on this app, we'll both get 5 free stocks. So that's pretty cool. So it helped me out. But yeah, anyway, I love doing analysis on here. I have three different brokerage here, but this is my favorite one. Lowest fee, most free, lowest fee, most free features. I keep my cash in here as well. Brings me the nice APY. Anywho, let's keep going here. So Bob said CLS stock. What long-term holds are you playing? Geez, I got Google, Meta, McDonald's, CEG. Those are some of my favorite long-term forever holds. Here and Amazon. I'll show you that after this. But here's CLS Celestica. I believe this is a Canadian company. They just seen a lot of growth recently. So yeah, and they're in the industry you kind of want to be in right now. Connectivity and cloud solutions. This business grew 30% year over year to a new record. So they're just really growthy. And if we go to the revenue's up 21% year over year, but net income is up 122% year over year. So what that means is they're growing their net margins. So everything about the business is kind of just at a record right now. So that's why they're at all-time highs. Do they do cans or plastic bottling? Yeah, they do all that, John. They do plastic bottles. They also bottle for Monster. So Coca-Cola Consolidated right here. They're a bottling company. They bottle for Monster Beverage. They bottle some Dr. Pepper products. They do like Topo Chicos, Coca-Cola. They bottle everything. And I love that company. Sweet Green. Yo, Riz, what's the ticker symbol? Is it SG? Yeah, so Sweet Green. I actually just heard about this company for the first time today. And this is like a Chipotle competitor. Basically, like in New York, you can buy like fresh salads and stuff. Anyway, it's kind of like a Chipotle, kinda. And here's kind of the bad part. They're just burning through a lot of money right now. They're losing like 30 mil of net income a quarter, and the sales aren't really growing. The sales are only up 0.5% year over year. Well, let's see. Did they beat the expectations? So look at that huge miss on revenue. Analysts were expecting 191. They only made 185. They lost more net income than expected, and they lost more EBITDA than expected. So they kind of triple missed. That's why they're down 23%. That's unfortunate. I've been thinking of BRKB recently. They're sitting on so much cash. Yeah, Berkshire Hathaway, BRKB. So this is Warren Buffett's company. Warren Buffett did just step down as the CEO. But yeah, this is kind of like an S&P 500 alternative. They own so many assets. I mean, if we look here, they're in insurance. So this company owns Geico. That's like most of the revenue. They own Geico. They're also in manufacturing, McLean. Where's the Pilot? They own those the Pilot gas stations. That's 11. Well, it's less than 11% of the revenue because they got to add their investments in public companies like Apple. Like they have a huge stake in Apple, for example, and a bunch of other companies. But yeah, revenue's down 1. Net income fell 50. So it looks like there was a bit of pressure on margins. But anyway, yeah, that one tends to outperform the S&P in the long run. Is VOO better than QQM? Yo, I think they're both the same. I love both of those stocks, or both of those ETFs right there. Yo, what up, Georgia Peach? Let's see here. ACHR, please. You know what? I'll pull up Archer Aviation. Here's the one thing I don't like about this stock like, if I'm just going to be honest with you, like look in the top right. This is a $6.2 billion company. So a $6 billion market cap. And this is still a startup. So when we go to revenue right here, it says there's no data because they've never sold anything. They've never sold a product or service. So revenue-less company, and they're losing, like, look at that. If you kind of average it out here, like 120, 130 million of net income every quarter. So in my opinion, it's a tough buy. Stellantis is the largest shareholder, though. Stellantis owns 9.5% of the shares. But again, it's they're still don't sell anything, and they lose 100 mil a quarter. Not great. So what's the best stock for the next 5 years that pay dividends? Yo, I wish I knew the answer to that because then I'd be doing great. But I love McDonald's, man. I think McDonald's is actually every stock in here pays a dividend, by the way. So it depends on what kind of yield you want. Like Google and Meta have like a 0.5% dividend yield, but like McDonald's has a 2.5% dividend yield. United Rentals, 1% dividend yield. Every stock in here pays a dividend. So actually, if you love dividends, here's a really cool one. That won't probably have the best total return, but they have been performing very well. This is ticker symbol MAIN, Main Street Capital. They actually pay you a monthly dividend. So literally every month, and this month I'm getting $1.79, but every single month this stock pays you a dividend. They're one of the few companies that do that, and it's actually sustainable. What stocks for beginners that is not an ETF? Yo, user, I would pick just like a Google, Amazon, Coca-Cola, companies and that you trust, like a Home Depot maybe. Visa, I love Visa. Yeah, Visa will be a great, probably total performer. So all these I really like. What is this one? What about Logan? He said, KGC stock, KGC. Um, Kinross Gold. So yeah, anything gold right now has just been doing great because of the price of gold is at like an all-time high right now. So this one's kind of just following gold. $23 billion market cap. Let's see here. So yeah, these are actually the mines that they own. These are the names of their gold mines. So pretty cool. Um, and yeah, they're making, look at that net income. Wow. 560 million in net income just this quarter. So yeah, crazy. Why Visa? Hey, we could look at Visa again. They print money and they return it all to the shareholder. Pretty cool. Through buybacks, dude. The buybacks on Visa are crazy. So here's applied or AMAT, applied materials. So yeah, this one has a nice dividend yield, right? Let's see here. So yeah, near 1% dividend yield. I like looking at the payout ratio too, and we can see the payout ratio is very safe. They grow the dividend every year. And let's go see how much they're making. Let's see what the valuation is on this company. So yeah, look at this PE ratio, which is the net income multiple. This is a 22 PE. Historical average is a 20. So yeah, semiconductor solutions. So that's a hot industry right now. Let's see what the revenue is. So revenue is up 6% year over year. I think this might be why the PE is still pretty, like it's a 22. You know, if you look at NVIDIA, you know, we compare that to AMD, NVIDIA, Broadcom. That's a dog cheap valuation. But it's probably just because of the single digit growth. So revenue's up 6%, but they're printed money. I mean, look at that. They're making near 2 billion of net income every quarter. So that's really solid net income they have on AMAT. And you get the nice yield there. So yeah, that looks like a great dividend growth stock. Do you invest in crypto? I do not actually own any crypto right now. I have some kind of crypto proxy stocks like a Robinhood. Robinhood kind of moves with Bitcoin, SoFi a little, but yeah, I don't actually own any individual Bitcoin, and that kind of has not been the move. You know, Bitcoin's doing great. So I kind of wish I owned them, you know. BULL stock. Yeah, man. So yeah, I actually oops. BULL. So Webull is this app right here. So I'm a customer. I use their little app, and I have probably given them a lot of fees. So I like being fully transparent. Check this out. We're only up 13% all time in this account. We've definitely underperformed. Here's how are we doing? We're up 23% year to date. Gotten $100 of dividends this so far year to date. Pretty cool. Anyway, I just show no other YouTuber or streamer shows all this. I just love being fully transparent. But anyway, here's their stock publicly traded, and they have a bit of a complicated share structure. They have like multiple classes of shares. I was a little confused when reading into their forms, but this is the one thing we can see for Webull. This is the good news. You know, revenue's up 31, and they're profitable on that. They made 12 mil this quarter. 10 million the previous quarter. So it looks like Webull is now a profitable company. So they are Chinese. So maybe one day they'll kind of trade like a Robinhood, move with Bitcoin and stuff. Well, Robinhood trades with Bitcoin so much because so much of their like net income comes from crypto transaction fees. Yeah, hey, someone said, remember, this is not financial advice. Absolutely, man. This is not financial advice. I'm not an expert. Remember, I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. I have none of that. Watch out for people impersonating me. I'll never follow you. I always say that because there's so many people impersonating me. I see them in the, like, I can see, like, the people, and and there's, like, two people watching called Nathan Robert. So I don't know how that's possible because that's not me. So, yeah, watch out. Anyway, all right, so can we see FIG stock? Yeah, they just IPO'd. This is the Figma IPO. This is like an app development stock. So I know someone, he had like a phone app store app that he developed it with the Figma application or whatever. So anyway, they just IPO'd, so there's not too much history. So if we go to their financials right here, there's not much data because they literally just when IPO'd, but here's what we can see. This is good growth. You know, the revenue's up 50% year over year. And on that, they made net income. They made 45 million in net income just this quarter. So, and they did the same time last year. So they're making net income every quarter. They have good margins, good balance sheet. Again, for the little one quarter of data we have here, but I'm still waiting for a little longer to see some more financials. Legitimately, recently Nathan impersonators have been following me. Yeah, I don't even know how, man. I don't. It's It's crazy, but someone said Nebius. So Nebius AI. So check this out. If we go to the NVIDIA portfolio right here, Nebius is one of the stocks that NVIDIA owns. And honestly, you don't want to just buy a stock because NVIDIA owns it. You always want to go do your own research on a stock. And when we go do our own research on Nebius, everything impresses me about this company. I mean, their revenue literally went after growing 200% from the previous year. Revenue went from 14 mil to 105 million. It's up 600%. I mean, that's incredible. Also, fortress of a balance sheet down here, really good balance sheet. So that's what's incredible. And I think they made net income on that as well. Oh, that was a little one-time adjustment. So they did not make net income on that, but still, Nebius, super growthy, man. I mean, 15 mil to 100 mil, that's crazy. This is the real Nathan Robert because he was nominated for the next Federal Reserve chair. Hey, I'm replacing Jerome Powell next. Oh, which portal? Or hey, Martin, I'm actually on a brokerage right here. If you want to get this little software I'm on, in the link tree in my bio, first link there. It's an affiliate link too. So if you go and deposit $100 on here, we'll both get some free stocks. Or you can just type it into Google. It's called Moomoo. But anyway, thoughts on Duolingo. So this is another incredible company that I'm kind of been watching. On earnings. So they originally went up to like $470. Now they're back down under 400. So they lost some of the momentum there, but I don't know why, because they have incredible metrics. I love subscription model companies. You know, it's all reoccurring revenue. And look at Duolingo's subscription revenue. I mean, it literally grows 40, 50% every quarter, every year. I mean, the subscription growth is nuts on Duolingo, and not just subscription revenue, but the advertising business is popping off too, up 38% year over year to a new record. So that's cool. But let's look at the metrics here, like FCF, which is free cash flow. Free cash flow is up 60% year over year. Revenue grew 41 and net income grew by 83. So again, they're growing their net margin, 17% net margin now, up 30%. They deleveraged like crazy as well. So look at this. The asset to liability ratio is now only at 36%. It's actually normal for the assets to go down because they're paying off their liabilities with cash. So the assets that go down at the same time, but it's really the ratio you want to focus on. It's only at 36% now. Everything at Duolingo is headed in the right direction. Pretty cool. Um, yeah, I bought it 390. It went down because of Chat GPT. Oh yeah, so check that out. That's one thing I've heard is hurting the Duolingo thesis. One thing hurting Duolingo thesis is like the competition, like Chat GPT is making another language learning app, something like that. So there could be some more competition. It's crazy. They have like 2 to 3K followers. The moment yeah, hey John, no. So someone said Roblox. You know what? Yeah, let's go back to Roblox right here. Oh, what up? We can look at UNH and CoreWeave too. CoreWeave is another huge NVIDIA holding, but where is it? Kathy Wood's portfolio. So one of her main holdings, her second largest holding, is in Roblox, and they've had some really good news, but also some bad news. But the good news has kind of outweighed the bad news here. So check this out. Here's a really cool metric we get on Roblox, and this is their daily active users. So if you had to guess, you know, how many you think? Well, sorry, there we go. Roblox actually has 100. Oh my goodness, I gotta back out real quick. Hold on. Sorry, my Wi-Fi is a little buggy right now. I do apologize. But check this out. Their daily active users is 111 million, up from only 79 million the previous year. So crazy daily active users growth. But one thing that's still concerning to me is their net income is still negative. They're losing 200 to 300 million in net income every quarter, and that's because of the stock-based comp. That's why the free cash flow is positive, but the net income's negative because they literally pay their employees a couple hundred million of stock every quarter, and that's included in GAAP net income. And they have a bit of the liabilities are a little high, but yeah, CoreWeave as well. Yeah, hey Johnny, try not to spam. Don't worry. Next up on the list, Johnny, is AMTM. Don't worry. Max said you made mention of stocks that pay dividends weekly. I don't. There was it's like I forget the ticker symbol. Sorry, there was. I don't really recommend those, but here's CoreWeave right here. CoreWeave, one of NVIDIA's largest holdings. It's 88% of their holdings is in CoreWeave. So a lot of this stock is owned by NVIDIA, and they also just acquired Core Z, which is a Bitcoin mining company. So this company is getting into Bitcoin mining. But yeah, they did just IPO, so there's not too much data behind this company. But here's the one piece of data we do get: this year-over-year revenue growth of 420%. So revenue literally went from 188 mil to 980 mil. Incredible. So email said what app is this? Yeah, hey, email. This is a brokerage that I'm on. So if you want to get this little software I'm on, it's in the link tree in my bio. Very first link there. Brokerage called Moomoo. You can just type it into Google either. But AMTM stock. And then we can look at Exxon and Reddit. I want to look at Reddit too. I love Reddit, man. So here is AMTM. This is a $6 billion company. Well, let's go look at their financials. So Global Engineering Solutions and Digital Solutions. Let's see. Revenue's up 66%. Wow. And they're just now getting net income positive. So they did lose just $1 million of net income, but that's a 95% improvement from the previous year. So as long as they keep that trend up, that's good. No dividend on this company, which makes sense. So yeah, I guess that's interesting. I got to do more research on them, but all right, so let's look at Reddit right here, RDDT. This is one of my favorite stocks that I've owned. Here, I'll show you my position in them, by the way. They've been a monster performer. I wish I bought more of them, but we got 4 shares. Again, with a company like Reddit and some of these others, I say I wish I owned more shares, but I really don't, because with all these risky companies, you don't want to have a huge meaningful position in them. Like SoFi, Robinhood, Dave, Sprouts Farmers Market. With some of these riskier companies, it's fun holding them, but only as a small couple $100 position. You don't want to have them as huge, meaningful positions. But here's why Reddit, I think, deserves to be at all-time highs right now. And first off, again, let's judge Reddit based off their financials. So forget the name Reddit, forget that they're a meme. Let's judge them based off their financials, and they're an incredible company. The revenue's up 78% year over year. Their ARPU, which stands for average revenue per user, is $3.80 a quarter. It grew nearly 40% year over year. They're making 40% more money per user than the previous year. I've looked at their investor presentation. I don't know how they're pulling that off, but revenue's up 77. They made 90 million of net income on that. They have a freaking fortress of a balance sheet. They literally have no debt whatsoever and now have $2.06 billion of cash. So anyway, everything about this company is just impressive to me. Tencent owns 6% of the stock. That's interesting. Tencent is the largest shareholder of Snapchat, and that's interesting. Anyway, I do own them, so I might be biased, but I own them for a reason. I need some insider to give me intel. Hey, me too, Joel. What's up, man? Someone or IDK said Taiwan Semi. This is one of my favorite stocks out there. Oh, we got to look at Uber and HE. Yeah, remind me to look at Uber. We'll look at Uber after this. Reddit is just getting started. Yeah, news. Dude, I love Reddit stock. Anyway, here's Taiwan Semiconductor. This company is at an all-time high. I'm surprised they're not up more. And here's why I think Taiwan Semi could keep on hitting new all-time highs. It's this PE right here. So the PE ratio, the net income multiple, is only a 25. I believe this company could stretch up to like a 28 or a 29 PE before it goes down again. And at that valuation, that's a $250 plus stock, new all-time high. So I believe Taiwan Semi is going to a new all-time high someday. Again, not financial advice here. They make those 5 nanometer wafer chips that are in everything, like your car windows, your washing machine. And look at their market share. It went from 61% to a 67%. Incredible market share growth, and not just market share growth, but a growth of the profits, the bottom line. They literally made 13.6 billion of USD net income in the most recent quarter. They're making over 10 billion of net income every quarter. And if you buy the stock right now, it's like an Nvidia with a yield. You get a 1% dividend yield with this company. So anyway, Taiwan Semiconductor, in my opinion, not financial advice, of course, it's like the perfect buy and hold forever stock if you're looking for exposure to chips. All right. Let's see. Uber stock. Yeah, man. So I love this company. I haven't looked at their earnings, so I can't wait to see what they were. I'm actually looking to get some exposure to Uber stock so we can see their active users. They have 180 million monthly active users, up from 156 million. Really good. They beat on revenue, beat on net income, and slightly missed on EBIT. So still great news. I mean, look at the free cash flow of this company. This is the incredible part. They print free cash flow. That's how they're able to buy $1.25 billion worth of Lucid cars last quarter, because the free cash flow is ridiculous. So they're making 2 to 3 billion of free cash flow a quarter. Same with net income. I mean, look at this. They're making over $1 billion in net income every quarter now. So anyway, Uber is one that I think is going to be a winner in the long run. Deleveraging their balance sheet. Look at this. The liabilities used to be 66% of the assets. Now it's only 57%. So they've deleveraged. I'm looking into buying that one. I like Uber right now too. What's up, man? Can you look at Doja said, can you look at VZ? So this is Verizon. I do think this is somewhat of a like you buy this to maximize your dividend income. And here's the bad news. I didn't realize this. Verizon is literally the same stock price that it was back in 1997. So in 1997, this was a $45 stock, and now it's $43. So yeah, you get the nice dividend, but do you really outperform the market in the long run? No. But again, you're buying this to maximize your dividend income because if we look at the yield here, it's a safe payout ratio. Like this is a sustainable dividend. You get a 6.3% dividend. But again, the stock price appreciation isn't much. And that's kind of the thing that's unfortunate about high payout ratio stocks. I mean, like that's why T-Mobile is doing so good. They have so much leftover money to they had a huge partnership with SpaceX. They just acquired a fiber company. Let's look at T-Mobile stock. I mean, they do pretty much exactly what Verizon does. But look at the T-Mobile stock. They have been on by the way, I might be biased. I actually own T-Mobile stock. That was my pick out of the cell carriers. I'm only up like 5% on them. But yeah, I own them for a reason because they do major buybacks. Yeah, the PE is a 23. Look at this. So Verizon, no, this is T-Mobile. They're making $3 billion of net income every quarter. So what is T-Mobile doing with $3 billion of net income a quarter? Well, if we go to the share buybacks, this is what they're spending all their money on. This is why I love this company. They're spending billions every quarter solely buying back their own stock. And you get a nice dividend as well. But if we look at the EPS versus the net income growth, this is the power of the share buybacks. This is what I try and introduce people to. The net income grew 10% year over year, all right? So the net income's up 10, but your return as a shareholder through EPS, net income per share, since there's way less shares that exist, you're up 14% year over year. So that's the power of the buybacks. Pretty cool. Anyway, what app you use? Yeah, hey, Gulfstream. I'm on a brokerage right here. It's called Moomoo. If you want to download it, it's in the link tree in my bio, the very first link there. Or you can just type it into Google, but it's an affiliate link too. So if you sign up for this app and deposit $100, we'll both get some free stocks. We'll both get 5 free stocks. So yeah, link tree in bio, first link to get this broker that I'm on. Let's see. Oh, Snapchat stock. Hey, yo, let's look at Snapchat stock. So check this out. Ticker symbol SNAP. This company is unfortunately at all-time lows because the losses are starting to worsen again. We were hoping Snapchat would get close to net income positivity, but that it didn't happen. Here's the good news, at least. I mean, look at this right here. Snapchat has 469 million daily active users. Pretty cool stat there. But here's the bad news. The business is burning through a lot of money, a couple hundred million every quarter. So, yeah, it's tough. These net income losses, 260 million in the most recent quarter. They can't keep that up for too much longer. I mean, and they've been doing that literally since IPO. That's why Snapchat is lower than they were when they IPO'd. I mean, look at this stock. That's so unfortunate. Same price that it was or lower than it was when it IPO'd in 2017. Still not profitable. When Instagram, Facebook, they print money. Reddit's printing money right now. Even Yelp is printing, well, not that much money, but Yelp is making money. See, they're on the no debt one. Let me see right here. Let me see some of the other ones. I think Pinterest is doing okay. Yeah, Pinterest, their stock's kind of the same as IPO. Are they making net income though, at least? They just barely. Anyway, you think HE has potential. So this is Hawaii Electric. This is the company that got blamed for, if y'all remember, this was years ago. Well, you can kind of see it in the stock price that it was years ago. August 2023, there were huge fires in Hawaii. Does anyone remember those huge fires in Hawaii where everyone was putting up blue tarps and stuff? Conspiracy. Well, this was basically this is the company blamed for it. This is the company they said an electricity utility line caught on fire and caused all the fires. So this company had to pay billions in fines. Let me see if I can go out. The payouts were recent. So if we go to the operating profit, yeah, dude, it was right here. There was actually more than this. It was over $2 billion, but They had to pay 2 billion in fines. That's the whole market cap. The whole company is worth 1.8 billion. So they had to pay more in fines than what the whole company is worth. They had to sell off the bank business. If we go back to a couple years ago, I remember I loved them for their bank assets, and they sold it off because they owned all of Hawaii's banking assets pretty much. And then they sold it off to raise money to pay off the debt. So it could have potential, but it's just an unfortunate hold. It's just a basically Hawaiian utility play, which is kind of boring. I love their bank business, but it's gone now. Yo, Visa, I'm going for this. Yeah, Visa's a good one to probably hold for the long run. Snapchat got hit during the carry trade. Yikes. Yeah, but they're like one of the biggest electricity companies in Hawaii. Yeah, they are the biggest user 5. Yeah. Okay, let's see here. Lyft stock and Baba. So yeah, this is an Uber kind of competitor. So we'll be quick about this one because we just looked at Uber. But this one's been underperforming like crazy. Uber's at all-time highs. This one's kind of close to all-time lows. It was basically because of their huge losses, but they're finally now, as of right now, they're the most profitable they've ever been. Look at this free cash flow. So Lyft is making a couple hundred mil of free cash flow every quarter. But the bad news is these net income losses. Right now, great news. They're the most profitable they've ever been. If we zoom out to just last year, they were burning, a couple hundred mil, 500 mil that one quarter. So that's the thing. I actually think Lyft is starting to look attractive because they're now the most profitable they've ever been. They're getting some interest from like Tesla. I heard there's a rumor like Tesla could buy out Lyft. That would be genius of Tesla, the stock, to do. But anyway, what was that stock? HE. Yeah, that was Hawaii Electric, ticker symbol HE. They got blamed for the Hawaii wildfires. Maybe it wasn't them, but $2 billion fine. I'm sure they did some investigating. Anyway, should I stay in Palantir? Yo, let's look at Palantir. Yeah, the valuation's a little high. Oh, we can look at Baba too. What app is this? Yeah, hey, Raihan, this is actually a software. It's a brokerage. It's a brokerage called Moomoo. So if you want to get this little software I'm on, you can use my affiliate link in the link tree in bio. First link there. Help me out. Only if you deposit $100, we'll both get 5 free stocks. But you don't even have to. You just type it into Google. It's called Moomoo. Anyway, so here's Palantir. Yeah, link tree in bio, first link. Here's Palantir. Stock's at an all-time high right now. Look at this valuation. This is the tough part, this PS, the price to sales. Not price to net income, but price to revenue is 129. That's pretty ridiculous. So this company would have to double their revenue by 2030 for this to be somewhat reasonable, and they may pull that off. I mean, if they CAGR at 50% growth a year, they could do it. So the revenue was $1 billion in the most recent quarter. And on that, they made 330 mil of net income. So the margins just hit a new record, 33% net margin. Half the revenue comes from the government. So many police stations are using Palantir's. Hey, thanks, Ryan. But yeah, oh my goodness. No, that's so loud. I am not AFK TikTok. Jeez. Okay, there we go. So anyway, look at the government revenue growth. It's up 49% year over year. So that's incredible growth. Revenue's up 50% year over year. Same with the commercial revenue. Commercial revenue is up 46% year over year. So both main segments of business are growing like crazy on Palantir. You also have an unleveraged balance sheet, literally no debt at all. Debt-free company with $6 billion of cash, up from $4 billion the previous year. So pretty incredible there. Yeah. Yeah. Every hour, if I don't touch the TikTok Studio app, it says that I'm AFK and I have to fill out a CAPTCHA for the stream to continue. So I just had to fill out a CAPTCHA. Sorry, I'm back though. Anyway, let's keep going here. ABVE has been flying under the radar. What is this one? ABVE. Above food ingredients. So again, we don't really like to cover these kind of companies because they're really small, but you know what? I'll check this one out for you. Because if you look in the top right, you see market cap. The whole company is only, 95 million. So a $95 million market cap. Disruptive agricultural and rudimentary ingredients. Hey, let's see revenue though. So yeah, this is kind of the bad news. Looks like they lost their growth. Revenue is down 23%. They lost 22 mil. Yeah, look at that balance sheet. That's not what you want to see. They used to have the same amount of liabilities as assets. Now the liabilities are significantly higher than the assets. So I can kind of see why this is a $90 million company, kind of close to all-time lows. Oh, and they're Canadian as well. So we weren't even looking in US dollars. Oh, well, you know what? Again, super careful with that market cap. What quantum computing stocks do you like? Honestly, man, I don't like any of those names. I don't like qubits. The market cap is too high on them. if I had to, honestly, I own Quantum, but it's not a pure play. I own Google, Oracle, IBM. These are all great quantum plays, even Microsoft. But the thing is, like, we'll pull up QBTS. Amazon, actually, IO&Q, Amazon has like $100 million stake in IO&Q. But again, right now, this is a $5.7 billion company. And, look, the revenue in the most recent quarter, let me see, the most recent one was 3 million. So I can't pay a $6 billion market cap. I know so many better, significantly smaller market cap companies with way better fundamentals, but the quantum industry has just been on fire. So those are pure play momentum quantum stocks. But, I personally would just pick the safer option, like a Google, an IBM, an Oracle. They have the money and the talent to be the industry leaders for quantum. And Google's already leading in quantum. IBM is too. Microsoft is a bit, but if I have $1,000, what should I do with it? Yo, Blanco, again, not financial advice here. I'd start off, just put the majority of that, just put it in the S&P 500. Most investors can't beat the S&P 500, so you want to own some of it, have a good portion of it in that VOO, S&P 500, like you need that. Then I'd play around with some individual companies that interest you, ones you know and have heard of, like go with a Coca-Cola, an Amazon, a Google, a Meta. You invest in stuff you use. So Dolo said Exxon, and Akira said what app using. Yeah, hey, Akira, this is a brokerage. If you want to get it, it's in the link tree in my bio. First link there. Or you can just type it into Google. It's a brokerage called Moomoo. But it's an affiliate link too, so it helped me out. But let me look at Exxon Mobil. I believe that's a Buffett company. No, he owns Chevron. Never mind. But Chevron and Exxon are the main oil plays. And look at XOM right here. ExxonMobil. This app is telling me, what is this right here? There is a bearish continuation triangle. Well, that's technical analysis. Anyway, I love looking at the financials, and the PE is a 15. That's normal for oil stocks. Yeah, look at that. Industry average is a 13. So they're trading right in line with the industry average for oil stock PEs. And look at this net income they make. It is down year over year just because the price of oil is. Yeah, wasn't that weird? This summer, every summer we get the hot rising oil prices, but this summer we've had some pretty low oil prices, surprisingly. Anyway, but this company prints money, 7-8 billion of net income every quarter, pretty good. And oil stocks are really useful for the dividends, getting your 4% dividend yield here. It's also a hedge, with war fears, inflation, currency fears. Oil usually does good in those environments. When gold does good, so does oil. But yeah, hey, sorry, people keep asking me, hey, I should have this pinned or something. But yeah, Balta, again, if you want to get this software, this brokerage that I'm on, it's a brokerage called Moomoo. It's in the link tree in my bio. It's that very first link there if you want to get it. It's my affiliate link. Yeah, no problem, Blanco. Why do you think Warren Buffett is holding so much cash right now? It's not, it's the Berkshire Hathaway, but pretty much, Buffett, his old age, I could understand why he has a bunch of cash. He doesn't need it, but probably just because there's no good deals, but it's kind of been holding cash before today hasn't been the move. Like he can be cash, but not me. I mean, the S&P 500 literally is at all-time highs. So being cash and not owning stocks before today, like he's been cash heavy for years. So that kind of hasn't been the right move. But I don't know why he has a lot of cash. Probably because for him to make a meaningful position, like he has to straight up buy the whole company. All right, let's see here. Can I ask how you generate so much capital to invest? Yeah, hey, I have some other YouTube channels and I have a job. But yeah, my main YouTube channel, I have a Rust compilation YouTube channel. That one channel. Before I turned 18, I had a Rust YouTube channel. It made me like 40, 50K. I had it saved up. Spent most of it on stupid stuff, but that's where I had my initial investment money. Anyway, let's keep going here. Let's see. And hey, I worked at McDonald's. Can y'all believe it? I worked at McDonald's. DCTH. Hey, actually, I'll show you. I own McDonald's even. McDonald's is such a fascinating company. McDonald's is a real estate royalty company. If you go spend $100 at any McDonald's, $100 of that goes back to the corporation as a 4% royalties. They call it a sales and marketing royalty. So any franchise, you go spend $100 at a McDonald's, $4 of that goes back to this as a high margin royalty. And but let me stop talking about McDonald's. We all know about them. Do you eat McDonald's? Heck yeah, I love McDonald's, but my standards are pretty low. I try not to though. Trying to it's kind of like Coca-Cola. I try not to drink it too much. I just grabbed a Coca-Cola. The thing said it was 89% of your daily sugars in just the one can, and it's like I don't feel good about drinking this. So I try not to do it that much. But anyway, let me this is a this is a stock I normally don't like to cover on here because they're so risky, but this is a small cap that I do own. I own 13 shares of DCTH. Here's why I think this one might be worth looking into. Again, you can't have a huge position. No, you cannot have a meaningful position in this company. I have $100 of it. I might put in another 50, but no more than that. Here's why. They're a $350 million company. So remember that the whole entire company's worth $350 million. I don't normally touch these kind of stocks, but here's why this one interests me so much. Remember, the whole company's worth $350 million. They have $81 million of cash on hand with no debt whatsoever. So look at this fortress of a balance sheet. They have no debt, 80 million of cash, which is a huge chunk of their market cap, and they're starting to grow like crazy. Look at this revenue growth. Went from 7 million to 25 million. And on that, they made 3 million of net income. They're actually making a bunch of interest on their cash. You know what? I think I can see this in the income statement. This is their interest they're making on their cash right here. Actually, it's on the very left. Oops. Oh my goodness. It's hard to tell, but they made 650,000 of interest in the most recent quarter. You know, a lot of companies, when they have debt, they paying negative interest. But anyway, DCTH, I think out of all the $350 million companies, this is like one of the best ones I've ever seen. Again, you can't have a huge chunk. You got to have a small position, but that's why I decided to buy a little bit of DCTH. $350 million company, no debt at all, $80 million of cash, making net income every quarter now. Growthy, they're a healthcare company. They sell this Haptazo kit, which is like a liver therapy kind of prescription. So yeah, that's what their revenue came from. And look, that's what kind of has been the growth here. You know, 1 year ago, the sales were 2 mil. Now it's 22 mil. Pretty cool. Anyway, that's DCTH. Let's keep going here. Hey, thanks, Balta. Let's see. Yeah, what up, Cool Hand Luke? CrowdStrike. Oh, and GCT, is that GigaCloud? Let me look at GCT first, then we can pull up. Yeah, we did look at Lyft a bit ago. Oh, Mary Carmen, are you still here? We can look at, let me know if you're here. We'll look at IBKR as well if you're still here. I love that company. Nancy Pelosi owns Interactive Brokers as well. But anyway, here's GigaCloud Technology. Look at that, up 30% the most recent days. So there must have been some great news, must have been earnings. Let's see. So yeah, look at that. Analysts were expecting 290 million of revenue. It's kind of like that orange line there. Now it's 322 mil of revenue. The net income, look at that huge net income beat, 91 cents of EPS, huge beat on EBIT. So that was real. Wow. So yeah, they're making net income every quarter. They're beating on analyst expectations like crazy, and that's why the stock is up so much. They deserve it. So Saucy, what up, Joe? He said FNMA. So is this what you're talking about right here? It must be, because it's actually done pretty good. Look at that, up 20% the most recent day. They're an $11 billion market cap. Do they pay a dividend? No dividend. I think they just single family, multifamily. Maybe this is like a real estate company. But look at that. They're making net income every quarter. So I don't know. I got to do more research on them. That's interesting. Maybe like a mortgage company. Real estate. Oh yeah, did we talk about Kava? I forgot to get to Kava. You know what? So this is kind of like, we looked at Sweet Green, we looked at Chipotle, we looked at Dutch Bros, and now here's Kava. I've actually never been to a Kava, but it's kind of like a Chipotle competitor, I believe, restaurant. So check this out. That's 99% of the business. Let's see the growth here. So revenue, hey, this is actually pretty good. Better than Sweet Green. The revenue's up 28% year over year, and they made net income on that. So look at this net income. They're making like 20 mil plus of net income every quarter. Pretty good balance sheet too. So, I wonder why they're down 5% on Friday. Report on August 12th. Oh, they don't. Oh, I thought they already reported earnings. So yeah, wait till the 12th on them. They'll either go up or down a bunch. So wait for their earnings. Oh, let's check it out. Yeah, IBKR. Let's check out Interactive Brokers. Yeah, so Nancy Pelosi actually just bought a stake into this company, but this is just another brokerage right here. This is like a competitor to Robinhood stock. So just kind of think of Robinhood stock here. That's also why they're at all-time highs right now. But check this out. Let's go see how they're doing. This is kind of some cool stuff. You can see their DARTs, their daily active trades, their brokerage accounts. They have 3.87 million customers. Anyway, these brokerages make a ton of money off interest because whenever a customer has cash on hand, you earn interest on it, and so does the brokerage. So yeah, they made 1.9 billion of interest income the most recent quarter. Also, brokerage commissions, how's that doing? Yeah, up 30% year over year. Really nice. And if we go to the net income, this is kind of the best part. This stock made $1 billion in net income in the most recent quarter, up 25% year over year. Revenue's only up 7%, so that means they're growing their net margins. 40% net margins on this company. Let me add them back to the watch list. Yo, that's about the same net margin as Robinhood. So crazy. Wait, what's the market cap? Dude, they're just about the exact same size as Robinhood. That's crazy. So Interactive Brokers is worth 111 bill. I think Robinhood's slightly less than that. Robinhood is worth 101 billion. Anyway, both have been monster performers. All right, let's see. Jonathan said, take a look at Google. It's so undervalued. I agree, man. Actually, it's had a little secret little rally up. I mean, look at Google recently. I mean, it's been up for like since this April. It's been up ever since, and it's had a new record today, or not all-time high, but in the past 3 months here, up at 2.5%. Really good day on Google. Here's why I think Google could potentially go back to all-time highs. 208 is all-time highs. We're $5 off that. So here's why I think they could even go higher than new all-time highs is because of this PE ratio. So the multiple, even though the stock's at all-time highs, the E part of the business has grown so much that the valuation is pretty fair. It's a 21. And this is a Mag 7 company. I believe Google has the ability to maybe stretch up to like a 25, 26 PE before it tops out or something. And check this out. If we look at the revenue's up 13, but net income's up 19. So Google's growing their margins. They're like an ETF in one. Man, Google owns Android. They own YouTube. The Google Cloud business is huge. They just acquired cybersecurity firm Wiz for $30 billion. They're in quantum chips. They own Waymo. I mean, Google's just so innovative. They pay a dividend. Also, another huge part about Google. What do you think Google's doing with 20 to 30 billion of after-tax net income a quarter? What is Google doing with 30 billion of net income a quarter? Well, they're literally spending a lot of that on buying back their own stock. They literally spend 13 to 15 billion dollars every quarter solely buying back their own stock. So they're so shareholder friendly company. Perfect buy and hold forever stock. Again, I might be biased here, but because I do own them, but that's why I own them. Those are the reasons. I love Google. I have 19 shares of them. Hey, we're up 25% on them now. They've been good, but I would even consider buying them around this price. I mean, that's one you want to have on your watch list and probably one you eventually want to get exposure to. So, yeah, IBKR's trend is crazy good. Eric, how'd you get involved with the market? I was making a lot of money, and then I stopped making a lot of money, and I basically just had some money in my bank, and I'm like, what am I going to do with all this money? I don't want it just losing to inflation. And then I learned about investing in dividend stocks. My portfolio used to be so different. Let me show you this, by the way. I used to be obsessed with dividend stocks. If we go to right now, I don't receive much dividends, but I've had this account since 2022. I used to own a lot of the high yielding junk. Look at this. I was getting $100 dividend payments every month. I've switched my strategy since then to the highest total performing stocks. But anyway, I mainly did it because I wanted to live off dividends one day. Anyway, let's keep going here. Can you do Lyft? Yeah, well, what? Man, we just looked at that one. We might do that one at the end. The Trade Desk stock. What do you think? The Trade Desk, TTD. So yeah, this is that advertising, the TV advertising company. And basically, we'll look at Apple after this. Yeah, we'll look at Apple. I love that company. The Trade Desk fell right here because they lost Netflix as a partner. Netflix, with their new ad tier subscription, used to use the Trade Desk to find advertisers, but now they just do it themselves. So basically, the company's margins fell a bit. I think it's oversold. Also, actually, I'm saying so much here. Sorry. The main reason the stock fell is because of the guidance. They gave guidance for slowing growth, like single-digit growth. But check this out. Revenue's up 18%, but net income's only up 6%. So that does mean the margins did fall a bit, but still, the valuation is also kind of high right now, a 65 PE. So because of the slowing growth, I think it's starting to lower their PE. So almost, sadly to say, I think the 38% down day isn't too crazy. I didn't realize they were so expensive before today. So I think that one might be worth looking into. They're still an extremely profitable company, making hundreds of millions in net income a quarter. And so yeah, if that's an advertising stock, if you like that one. But let's go look at AAPL. Someone said GoPro stock. Man, GoPro's going bankrupt. But we might look at them. Here's Apple though. Apple just had a huge $100 billion investment announcement at the White House. What's also weird is Tim Cook. Did anyone like see the event like where Tim Cook went to the White House with Trump? It was kind of weird, dude. Tim Cook gifted Trump a gold. He gifted Trump a golden statue of his head. It's kind of funny, kind of weird. But anyway, let's look at Apple right here. Maybe that's why the stock's going up so much. Oh, like they also get bent the knee because look, Apple, like Trump just announced these Indonesia tariffs or India tariffs as well. And they're like, oh, everything except Apple product. The only thing exempted is Apple products. So Apple's getting like certain favorable treatment, which is good for them. Look at their huge market share. They have obviously smartphone market share is at 19%. And iPhones are half the revenue. So iPhones are half the revenue, but the real like winner in terms of their net income is actually the services business. So whenever you go spend $100 in the App Store, you go buy some Clash Royale gems, $30 of that is taken by Apple as a royalty. So 30% of $30 of that goes back to Apple as a royalty. So that it's 100% margin for Apple when they receive that money. Then they sell the Macs, the wearables like the AirPods and the iPad. And here's also why Apple is affected by tariffs. Did you know only 36% of Apple's revenue comes from the United States. 25% of all the revenue comes from the EU, and then China, and then all these other countries. So yeah. Also, Apple has the largest buyback program of any company in the world. So they're making 20 to 30 billion of net income a quarter. What is Apple doing with all that? Well, if we go to the buybacks, they literally spend close to 25 billion of net income every quarter solely buying back their own stock. So Apple's so shareholder friendly. Here's the power of it. So look, net income's up 9%. So net income's up 9, but EPS, net income per share, is up 12% because there's less shares that exist. Pretty crazy. Anyway, same with Google. Google does crazy buybacks. That's why I love profitable, huge companies because they just buy back their own stock like crazy. Yeah, hey, yes, sir. There is a desktop version of Moomoo. There is Wasinator, yeah. Baba stock. Yeah, hey, this is known as like the Chinese Amazon. They own AliExpress. It's a huge e-commerce company. Check this out. They are Chinese, so they inherently just get a lower multiple, but they're trading at a 16 PE. And we can see their active users. They have literally 903 million annual active users. Pretty crazy, but look at this net income they're making. The bottom line is nuts. I mean, they're making a couple billion in net income every quarter, and this is in US dollars as well. Free cash flow, they usually have the one quarter. Oh, wow, the free cash flow just went negative. They must have invested. Yeah, they did invest a bunch these past 2 quarters, so that's interesting. I wonder what they invested into. Anyway, they're cool. They're like the Chinese Amazon. Yeah, they just started paying a dividend too, low payout ratio on them. When you buy or sell, how much time do you spend watching the market every day? Well, I spend too much time watching the market every day since I stream and do this right now. But yeah, not a crazy amount of time. I mean, I don't know, to be honest with you. Probably more time than the average person should. Moomoo, hey, yeah, IDK, what's up, man? Eunice said Upstart. What's Upstart ticker symbol? I will check that one out for you. What app is this? Yeah, hey, user67. I'm actually on a brokerage right here. So if you want to get this app I'm on, it's my favorite software. Lowest fee brokerage. I keep all my stocks in here. It's in the link tree in my bio. It's the very first link there. It's also an affiliate link. So if you go and deposit $100, we'll both get 5 free stocks. And or you can just type it into Google. It's a brokerage called Moomoo. But yeah, it's my favorite one. You can see like the super investors portfolios as well. But yeah, we'll look at a few more stocks here. Then I actually got to run. I've been streaming for 2 hours and 40 minutes. My head is starting to hurt. I've basically just been sitting in a room talking. But I've had a great time doing this. I really appreciate y'all being here. If y'all want to hit the follow button, by the way, we stream every day. My main stream, my most popular streams are the ones on Sunday. So tomorrow we're going to be streaming, and it should be really fun. So yeah. And don't forget to drop a like if you're on the YouTube channel. Yeah, best way to support me, by the way, I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. I have none of that. No course. Watch out for people impersonating me. I sell nothing. The only thing I do have is a YouTube channel. So if you want to help me out, subscribe to my YouTube channel. I'm also streaming on there. If you missed anything, you can replay it on the YouTube stream. My YouTube channel is just called Nathan Robert. Just type into YouTube Nathan Robert. But also my YouTube channel is linked in the link tree in my bio. Anyway, yo, Juanito, no way, dude. Thanks so much for the 5 roses. I really appreciate that, man. Thank you. So here's Upstart stock. Let's see what they do. So platform and referral fees. Wow, look at that. It's up 105% year over year. So Let's see, revenue. They beat on the revenue the analysts were expecting. They beat on net income and they beat on EBIT. So they triple beat. They made net income this quarter. Didn't they gap down? I wonder why they gapped down then. Maybe there was some bad guidance or something. But yeah, it looks like their referral fees are up like crazy. What are the gross margins on this company? Oh, doesn't tell me, I guess. Oh, wait. A gross margin. Oh, I guess we don't get that. Oh, well. Hey, what up, Pod Gems? He said Intel, INTC. And what up, Abel? How's it going? So, Intel stock. So, what time on Sunday during the week? I'm probably going to be doing 2 streams on Sunday tomorrow, one in the morning, and then one right at 8 o'clock Eastern time as the market opens on Sunday. Oh, yeah, we'll look at VRT as well. So here is Intel. This one has been a disappointing performer. And look at this. Here's what's kind of crazy. If you bought Intel in 1999, you're actually down on your position. So, or it's the exact in 1999, Intel stock was $20 and it's $20 today. So it's been a tough hold for many decades. But here's why people like them. They have a huge market share. Let's see, a 63% PCGP market share. It actually went down from 66%. Nvidia's market share went up by 2% actually, but here's also the bad news here. They're kind of just burning through a lot of money. Look at this. They lost $3 billion of net income this quarter, $1 billion the quarter before. I don't know how this is possible, but they lost $17 billion just that one quarter. The free cash flow, they're losing billions of free cash flow every quarter. So it's just a tough business to buy right now because of these huge losses. It's tough. Let's see here. Oh, VRT. Ooh, we gotta look at Home Depot. I love Home Depot stock. We'll check that one out too. So here's Vertiv. This is, I believe, a server company, or let's see, products. Let's just see how the financials are doing. So this is probably why the stock's at all-time highs. Look at that growth. The product revenue is up 39% year over year. So that's some very good product growth, as well as the services and spares also at a new record, up 20% year over year. So both main businesses are growing like crazy, and they're super net income positive. Look at that, $330 million in net income just this quarter. So pretty good. I can see why they're at all-time highs. Also, really low payout ratio on the dividend. So Simon said I didn't answer any questions. I didn't see any questions there. Sorry if I don't get to all the stocks here. I do apologize. What do you think of Home Depot stocks? Yeah, let's look at Home Depot. Yeah, hey, Maxwell, try not to spam there. We'll look at that one next. Don't worry. Let's see. So Home Depot stock, this is a nice dividend growth company. I love the dividend growth stocks because check this out. You get a 2.3% dividend yield right now. They grow their dividend every year. You know, in 2021, the dividend was $6 a share. Now you get $9 a share. So really good dividend growth. The PE is pretty fair as well. You know, a 26 PE. Let's see the net income. So yeah, look at this net income. They're making like 3 to 4 billion of net income every single quarter. Let's see how much the dividend costs. So look, let's not give this company the benefit of the doubt. Let's say they make 3 billion of net income a quarter. You know, that one quarter was 4.6 billion, but let's say they only make 3 billion a quarter. Here's the dividend. We can see it's still very much covered. The dividend only cost 2.2 billion a quarter. So yeah, Home Depot is pretty cool. It's a dividend grower. Let's see. BBAI got earnings on Monday. Oh, that'll be interesting. So yeah, we do get a lot of earnings next week. On that one's August 11th. Let me show you the earnings hub really quickly. Or let me just search this by what stocks I have on my watch list. So next week we get Life 360 and Circle. Those companies. We get Porsche on Wednesday. Honestly, not much. I actually thought it was more than that. Anyway, never mind. All right, let's see here. We'll look at, you know what, TMD, or wait, let me look at this one first. FGMC. Oh, was that? Oh, we just looked at this stock. I think this is the stock that's buying Boxable, or I don't remember. Let me go to the news here. Yeah, so look at this. FGMC to issue 350 million shares, valuing Boxable at 3.5 billion. So this company is gonna buy Boxable. Basically, Boxable makes those really small, like box size houses that are for sale. Anyway, here's a cool company, TMDX. So Transmedics company. This is a healthcare company. Let me actually go see what their revenue is from. So yeah, liver revenue and heart revenue. So they do like this liver therapy stuff. And look at the growth here. This is what people like about them. The revenue's up 50% year over year. So they've seen some really nice growth of their liver revenue. What about the heart revenue? Heart revenue's up 13%. So both segments of business are growing pretty well. Yeah, look at that. So they're really net income positive, 35 million in net income the most recent quarter. Revenue's up 37%. So just profitable company, deleveraging your balance sheet like crazy. So I like this one actually. I do like that one. What platform is this? Yeah, hey, Chowder. This is a brokerage right here. If you want to get this little platform I'm on, it's in the link tree in my bio, the very first link there. It's where I love buying stocks. Lowest fee brokerage. I use these other ones as well, like Robinhood and Webull, but they're not as useful as this one in my opinion. So yeah, if you want to get this one I'd recommend. It's in the link tree in my bio, very first link there. It's a brokerage called Moomoo. If you want to use my affiliate link, if you deposit $100, we'll both get 5 free stocks, or you can just type it into Google. It's a brokerage called Moomoo. So let's look at a couple more, one or two more. VRTX, is that what is this one? Vertex. Oh, Barilla. We'll look at TEM as well. We'll look at Tempest AI. Vertex Pharmaceuticals. So a huge company, actually. Wow. $94 billion company. And that's after this huge decline. So before they were like a $120 billion company. Let's go see why they fell so much. So looks like they sell these little this prescription right here. What's the net income? Well, let me just see what the earnings were. So they beat on revenue, they beat on net income, and they beat on EBIT. So they triple beat on every metric. So then I do wonder why the stock is down. Maybe I can click on the news and find out. But dude, the CEO, look at that news. The CEO and president buys 5,000 shares, buys 4 million of common stock. Anyway, I wonder what happened there. That is interesting. So TEM, here's Tempest AI. This is the company bought by Nancy Pelosi and her husband. So pretty interesting stock right here. They're in genomics. Look at this. That's 75% of the revenue. Pretty niche. And look, this is why I like Tempest AI, because they're so growthy. I mean, the revenue's up 89% year over year, literally to a new record. So really good growth there on genomics. Also, the data and services business, good to see that this one's also up 43% year over year. So both businesses are growing like crazy. Still got to be careful. They are losing net income every quarter still, but the growth of the revenue has been so impressive. They've also kind of deleveraged their balance sheet. I mean, look at this from a year ago. They used to have way more liabilities than assets. Now they finally have more assets than liabilities. So pretty cool. What did anyway. Let's see here. QH easy. What is QH? I don't know what that is. I don't know if this is what he's talking about, but I would stay away from this one. If you look in the top right, this whole company is worth $10 million. So this is a $10 million company. Hard to really trust that. But anyway, I hope you guys have a great rest of your Saturday. Make sure to hit the follow button because we'll be live tomorrow. And by the way, if you follow me, watch out for people impersonating me. This is my only account. I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. I sell nothing. So watch out for people impersonating me. I don't have another TikTok account. The only thing I do have is a YouTube channel. So if you want to help me out, subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. And if you miss anything, you can replay it on the YouTube. You can replay it on YouTube. So yeah, hope you guys have a great rest of your day. Again, be here for tomorrow's stream. We're going to be doing 2 more streams tomorrow. Sunday is usually the best day for streaming. So yeah, hope you guys have a great rest of your day. See you in the next one. Have a great one. And hey, thank you to everyone on the YouTube stream. I really appreciate y'all. I'm trying to build up the YouTube stream the most. So thank you all so much. See you later, Pod Gems, X Beanie. Why don't you invest in crypto? I love, owning. Only crypto I like is really like Bitcoin and Ethereum, and I kind of regret not owning those. But yeah, anyway.